Hello friends, I hope you are all doing good. Welcome to the crash course of indirect taxation. So in this video, which is the first video of the crash course, you will be learning about the introduction to GST. So the crash course is divided in such a manner that first we'll be discussing about the GST and then customs if it is applicable to you. So the first topic for our discussion is introduction to GST. Very small and very beautiful topic. This topic is if you talk about the importance of this topic from your examination point of view, now normally they will ask MCQ based questions from this particular topic, or they may ask a descriptive based question, meaning a theory question they can ask from this particular topic. Theory questions which if they are going to ask, because they had asked it in the previous examination also. So if they are going to ask theory question from this chapter, that theory question will be on an average for 3 marks or 4 marks, max to max 3 to 4 marks. But yeah, normally if they are not asking any theory questions, a question on MCQ based question will definitely be coming from this chapter. So average say 1 to 2 marks is the normal weightage of this chapter. Sometimes if you are lucky, then 3 to 4 marks may come from this chapter. Yeah, so before actually understanding the concept of GST, or before actually understanding what do you mean by indirect taxes, etc., let us know what is the meaning of tax. See, only if you know what do you mean by tax, you will be knowing that why the government is collecting all these things, etc. See, normally what happens is there are various different facilities which the government is giving to us. For example, the roads which you are accessing for your daily travel purpose, or the highways which you are seeing, etc. All these things are built by government. Now the roads which is seen, government is not coming to you and telling, sir, I am going to construct a road outside your house, I am going to construct a highway from, say, I'm staying in Bangalore, say from Bangalore to your village in Mysore, etc. So government is not coming and asking us money for construction of those roads, or construction of the park which is located nearby your house, or you would have seen street lights which are there. But obviously street lights needs electricity for running, and government is not coming and asking us, sir, there is a street light right opposite your house, please give me so much amount as electricity charges. And we also have government schools, government colleges, we also have government hospitals, etc., where free services are given, free healthcare services or free education services are given by government. Now there are various different facilities which the government is giving to us. Now for providing these facilities, government needs money. So this money which is there, government is not directly coming and telling, sir, for this education purpose give me 5 rupees, for this healthcare services give me 10 rupees, etc. No, government is collecting this money from you in the form of tax. So what is tax? Tax is one of the source of revenue to the government. What is tax, sir? Tax is one of the source of revenue to the government. So government needs money for giving these various facilities. Where is the government getting this money from? From tax. They collect something called as tax from us. Now this tax which is there can be collected directly from you, or it can be collected indirectly from you. So if it is directly collected, it is called as direct taxes. If it is indirectly collected, it is called as indirect taxes. So what is tax? Basically, tax is the amount which is paid by individuals and property owners for various different facilities which is given by government to us. So tax can be defined as the pecuniary burden. Pecuniary burden means monetary burden. It is an amount which is collected by them in the form of money. In the sense, pecuniary burden means, say you don't give 1 kg rice to government. There is no barter system. You have to pay this amount in money only. It is a pecuniary burden which is laid upon individuals and property owners to support government. So whatever activities government is going to undertake, or it is undertaking for supporting that, government will ask you to pay some amount. That amount is called as tax, and it is extracted by legislative authority. Obviously there should be a law. Only by that law the government can collect taxes from you. Now this tax which is there can be of two types. Basically the tax which is there can be of two types. It can be either direct taxes or it will be indirect taxes. So these are basically two types of taxes. What do you mean by direct tax, sir? What do you mean by indirect tax? Direct tax in simple words means the tax which is collected by the government directly from you. say if I am the government and you are the person who is paying the taxes, if I am collecting the tax directly from your pocket, that is direct taxes. If I am indirectly collecting the taxes from you, then it is called as indirect taxes. Sir, what sir? This answer any BCom graduate or any 5th standard student can also answer. But what is the actual meaning? See, direct tax is a type of tax wherein the incidence and the impact is on same person. Sir, repeat. Direct tax is a tax wherein the incident and impact is on same person. And if the incident and impact is on two different person, then I call it as indirect tax. So I will be taking care of your indirect tax of your syllabus, but for our normal understanding, let me just explain you what is the difference between direct tax and indirect taxes. Now, direct tax, incident impact on same person. Say for example, I am earning an income. Say I am earning 10 lakh rupees. Now for easy calculation, let us take the rate to be 10%. Okay, assuming the tax rate is 10%. So I am earning 10 lakh rupees. Government says you will have to pay me a tax of 10%. So out of this 10 lakh rupees, I have to pay 1 lakh rupees as direct tax to government. Now here, who is the person who is earning the income? Sir, you are earning the income, sir. And who is making the payment of tax to the government? Sir, you are making the payment of tax to the government. So this happens in what, sir? This happens in direct taxes. The person who is earning the income is the person who is making the payment of taxes to government. I am earning the income, I am paying the taxes to the government. This is called as direct tax. Whereas in case of indirect taxes, it is not like that. In case of indirect taxes, say for example, you come to Priya Sarees. So this is Priya Sarees. You come to Priya Sarees, you purchase a saree worth rupees 10,000. Assuming GST rate on this saree is 10%, so 1000 rupees is the GST. The total amount which you have to pay for this saree is how much? 11,000 rupees. The total amount which you have to pay is 11,000 rupees. Now, please understand this carefully. Please understand this carefully. Now, you are the person who have purchased the saree. So, this is the recipient and this is the supplier. I sold the saree to you. I supplied the saree to you. Priya Sarees supplied the saree to you. So, I will be called as the supplier and you have received the sarees. You will be called as recipient. You will be called as what, sir? You will be called as recipient. So, you are going to pay me total of 11,000 rupees. Total of 11,000 rupees is what you are going to pay me, out of which I am going to pay 1,000 rupees to government. See, you are paying me 11,000 rupees, wherein 10,000 rupees is towards the saree and 1,000 rupees is towards the tax. This tax I am collecting from you and making the payment of the taxes to government. So this is called as indirect taxes. What happens in case of indirect taxes? You don't have to directly pay the taxes to the government. Here there is a mediator. There is a person who is connecting you with the government. So he will collect the taxes from you and he will make the payment of taxes to the government. Now what is happening in this case? The incidence is on me. The incidence is on me. Sir, what do you mean by incidence is on me, sir? The incidence is on me. That means that because I sold the saree, I created the incidence. I created the incidence of payment of taxes and the impact of making that payment is on you. Actually, the money is coming from your pocket. Money is not going out from my pocket. The money is coming from your pocket. So here, what is happening? The incidence is on one person and the impact is on another person. The impact is on another person. This happens in which case, sir? This happens in case of indirect taxes. What happens in case of direct taxes? The incident and impact is on same person. I am earning the income. I have to pay the taxes to the government. I have to pay the taxes to the government. This happens in case of direct taxes. Now in simple words, if I have to say for example, you are not feeling well. You are not feeling well. You go to the hospital. Doctor says, there will you will have to, there will be an injection which will be put to you. So the doctor is putting the injection to you. You are feeling the pain. You are not feeling well. You go to the hospital. The doctor says, I will have to put an injection to you, and you say, okay sir, please put an injection. So he is putting an injection to you. You are feeling the pain. This is direct taxes. What is happening here? The injection is put to you and the pain is also felt by you only. Whereas, assuming your girlfriend is not feeling well, say if it is a girl, your boyfriend is not feeling well. So say for example, I'll talk from my point of view. My girlfriend is not feeling well. My girlfriend is not feeling well. I am taking my girlfriend to the hospital. The doctor says that there will be an injection which will be put. So the doctor is putting the injection to the girlfriend, but I am feeling the pain. The doctor is putting the injection to her, but the pain is felt by me. This happens in case of what, sir? This happens in case of indirect taxes. What happens in case of indirect taxes? The incidence is on her, but the impact is on me. The incidence is on her, but the impact is on me. So in simple words, that example will help you. So in case of direct taxes, what happened? Incident impact is on same person. Indirect taxes, incident impact is on two different persons. Direct taxes are basically income based. If you are earning an income, you have to pay the taxes to the government. But whereas indirect taxes are not income based, they are supply based. In simple words, direct tax is a tax which is collected from a person, whereas indirect taxes are the taxes which is collected on goods and services. So direct taxes are what, sir? They are the taxes which are collected from an individual, but whereas indirect taxes are the taxes which is collected from on goods and services. So direct tax on individual, indirect tax goods and services. Sir, what do you mean by this? Say for example, I sold a product. Say assuming this particular sari, Priya sari sold a sari for 10,000 rupees. Now because I sold a sari worth rupees 10,000, on this sale I will have to pay indirect tax. Why, sir? Because it is a product. Whereas assuming I made a profit of rupees 100 on the sale of this sari. I made a profit of how much? Of rupees 100 on the sale of this sari. Now on this profit, they are going to collect tax from me. On the sale of the sari, there is a product, they are going to collect the taxes because there is a supply of goods which is made. Now by selling this sari, I have earned some income. Mr. Dilip has earned some income. He has made some profit. So I will collect direct taxes from you. So direct taxes are collected from individual. They are not product based. Sir, what do you mean by that? Say by selling this sari, I made no profit. By selling this sari, I made no profit. If you made no profit also, you will have to pay indirect taxes. Indirect taxes is something which you will have to pay because that is a tax which is collected on goods and services. Whereas you don't have to pay direct taxes. Because there is no profit which is made by you. You have not earned any income. Because you have not earned any income, you don't have to pay income tax. So direct taxes are income based. It is a tax which is collected by individual. Only if you are earning an income, you have to pay the taxes. And indirect taxes are supply based. If you are supplying goods or services, you will have to pay the taxes. Now, one of the beauty of direct taxes is that it is progressive in nature, whereas indirect taxes are regressive in nature. Sir, what do you mean by this? One is progressive in nature, one is regressive in nature. See, this means that direct taxes says if you are earning more, pay more amount of taxes to me. Direct taxes says if your income is more, you will have to pay more amount of taxes to me. Whereas indirect taxes is not like that. Indirect taxes says I don't care how much your income is. I don't care whether you are a rich person or a poor person. I don't care whether you are Mukesh Ambani or a beggar. You will have to pay me the same amount of tax. Meaning in case of direct taxes, there is discrimination which is made, whereas in case of indirect taxes, there is no discrimination which is made. Meaning what, sir? Say for example, if you are earning income up to 2.5 lakh rupees, direct taxes says you have to pay zero amount of taxes to me. You don't have to pay any taxes at all. If you are earning from 2.5 lakhs to 5 lakhs, you have to pay a tax of 5%. If your earning is from 5 lakh to 10 lakh, you have to pay a tax of 20%. More than 10 lakhs, you have to pay a tax of 30%. Then surcharge etc. will come. So what is happening over here? as and when your income is increasing, as and when your income is increasing, the amount of tax which you have to pay also increases. So if a person is earning only 1 lakh rupees, he may not have to pay any taxes. But if a person is earning 10 lakh rupees, he will have to pay tax at 20%, 5%, etc. Whereas indirect taxes says, I don't care about how much your earning is. I don't care about how much your earning is. If you are purchasing a Parle-G biscuit of 10 rupees, which is an MRP, which is MRP is 10 rupees. We all know that MRP is inclusive of taxes. You can just see the any product, MRP based product, they would have written inclusive of taxes. Assuming it includes tax of 2 rupees. So this 10 rupees which you are paying, 8 rupees is the amount which will go to the manufacturer, and 2 rupees is the amount of tax which will go to the government. Now this Parle-G biscuit which you are purchasing, whether a beggar is purchasing this Parle-G biscuit or Mukesh Ambani is purchasing this Parle-G biscuit, it does not matter whether a beggar is purchasing this Parle-G biscuit or Mukesh Ambani is purchasing this Parle-G biscuit, both of them will have to pay 2 rupees only as taxes. From both of them only 2 rupees will be collected. They won't say that Mukesh Ambani, you are earning 5,000 crore rupees, you are earning 10,000 crore rupees, etc. You have to pay more amount of taxes to me. No. If you are earning more income, you pay more income tax. But in case of indirect taxes, the amount of taxes which you have to pay will be same. Why, sir? Because it is a tax which is collected on goods and services. There is a goods which is taxable at 5%, you have to pay tax at 5%. There is a product which is taxable at 12%, you have to pay taxes at 12%. There is a service which is taxable at 18%, you have to pay taxes at 18%. Now you, in the sense, whoever is purchasing that product, that person will have to pay the tax at that particular rate. Whereas in case of direct taxes, it is not like that. If your income is above basic exemption limit, only then tax will be applicable to you, etc., etc. So one of the example for direct taxes is income tax, and one of the example for indirect taxes is GST and customs. So these are some basic difference between direct taxes and indirect taxes. Now, since our topic for discussion, now the board which is managing direct taxes is called as CBDT, and the board which is managing indirect taxes is called as CBIC. CBDT means what, sir? Central Board of Direct Taxes. CBIC means what, sir? CBIC means Central Board of Indirect Taxes and Customs. Now, since our main point of discussion is indirect taxes, let us understand what are the important features of indirect taxes. What are the important features of indirect taxes? Now, in examination, they had asked question once on this particular topic. That was during the beginning of GST. I mean, in the year 2017, November examination, July, the GST came into existence in November, and in that December examination, they had asked this question on features of indirect taxes, or they can also ask a question called as features of GST, because GST is also an indirect taxes. So they had asked a question for 4 marks. I mean, that was the only time when they had asked a question on this particular topic. Now, what are the features of indirect taxes, or what are the features of GST? The features of indirect taxes are point number 1. They are one of the important source of revenue to the government. See, as I told you, tax is the amount which you are paying to the government, so that various different activities which is undertaken by them can be funded. So if it is an amount which you are paying to the government, that means it is a revenue to the government, correct? It is what, sir? It is a revenue to the government. Please note, tax is not the only source of revenue to the government, but it is one of the sources of revenue to the government. Now, say government is getting revenue in the form of tax. Government is getting revenue in the form of fees. Government is getting revenue in the form of, say, penalties, etc. In simple words, say for example, you are purchasing some products, you are earning income, you will pay tax. Then say you are taking some license, you have to pay some fees for application. You are applying for passport, you will have to pay that passport application fees, etc. Then penalty, say you are violating traffic rules, or you are violating any of the rules which is formed by government, for that they will collect penalty, etc. So there are various different sources of revenue to the government. One of the source of revenue is what? Tax. This tax which is collected by the government can be either direct tax or it can be indirect tax. It can be either direct tax or indirect tax. Now, indirect tax is one of the most important source of revenue to the government. One of the most important source of revenue to the government. Now, indirect tax contributes almost around 60% of tax revenue to the government. So, assuming if the government is earning 100 rupees from tax, from all these different sources, if from tax it is earning how much? 100 rupees, then out of that 100 rupees which government is earning, 60 rupees is given by indirect taxes. 60 rupees is given by whom, sir? Indirect taxes. Please note, indirect taxes does not mean only GST. GST plus customs. So 60% of the total tax revenue which the government is getting is through the indirect taxes. So it is one of the important source of revenue to the government. Then another feature of indirect taxes is that it is a tax on goods and services. It is not a tax on product. It is a tax on, it is not a tax on individual or a person. It is a tax on goods and services. It does not matter who the person is. It only cares about the product. It only cares about the goods. It only cares about the services. Say for example, there is a sari. For sari, the rate of GST is 5%. If a person is purchasing the sari, you will have to pay the tax at 5%. Say for example, you are purchasing a television, the rate of tax is 28%. So on purchase of this TV, you will have to pay the tax rate at 12%. Say you are going to a restaurant and having a food, it is a luxury restaurant, you will have to pay tax at 18%, etc. So they have fixed a particular goods, they have fixed the rate for a particular goods and services, and if you are purchasing those goods and services, you will have to pay that amount of tax. Say for example, for books or for egg, etc., or milk, etc., the rate of tax is 0%, meaning they are exempted. You don't have to pay any taxes at all. For healthcare services, you go to the hospital and there is some treatment happening, etc., the doctor is not allowed to charge extra GST. 500 rupees maybe his fees, but he will not charge GST extra. He will not charge GST, etc. Why? Because they are specifically exempted. They are specifically exempted. So here, what happens in case of indirect taxes? In case of indirect taxes, there is a product. For that product, they have fixed a rate. There is a service. For that service, they have fixed a rate. So if the rate is 5%, you pay the tax at 5%. If the rate is 12%, pay the tax at 12%. If the rate is 18%, pay the tax at 18%. If it is 28%, pay the tax at 28%. So it is a tax on goods and services. It does not care who is the person who is purchasing. The person who is purchasing can be a small kid, or it can be an old man or woman. So it is a tax on what, sir? It is a tax on goods and services. Then one more important feature of indirect taxes is that in case of indirect taxes, there is shifting of burden happening. Sir, what do you mean by this shifting of burden happening? So in case of indirect taxes, what happens is the person who is paying the tax is not paying from his own pocket. For example, there is a manufacturer, there is a wholesaler, there is a retailer, and there is final consumer. Now, a manufacturer, assuming a manufacturer sells the product for rupees 100, assuming the manufacturer sells the product for rupees 100, on this 100, let us assume that the tax rate is 10%. Let us assume that the tax rate is 10%. So he will collect 10 rupees as tax. So the manufacturer will collect from the wholesaler. If the wholesaler wants this product, he will have to pay how much? He will have to pay 110 rupees to the wholesaler. Now this manufacturer is going to pay the 10 rupees to the government. So manufacturer is not paying the taxes from his own pocket. He is actually collecting it from wholesaler and then remitting it to the government. Similarly, wholesaler is going to sell the product to retailer. At the time when he is selling the product, assuming he sold the product for 120 rupees and assuming 10% is the GST rate, he will charge GST of 12 rupees. So total amount which the retailer is going to pay the wholesaler will be 132 rupees, which will include 12 rupees of taxes also. So is the wholesaler paying the tax from his own pocket? No, he is collecting it from the next person in the supply chain, which is the retailer. Similarly, the retailer sells the product to the final consumer, assuming he sold the goods for 140 rupees and 10% is the GST rate. The total amount which the final consumer, the consumer will have to pay for this product will be 154 rupees, which will include tax of rupees 14, which will include the tax of rupees 14. So retailer has to pay tax of rupees 14 to the government, but is he paying from his own pocket? Answer is no. What is he doing? He's collecting it from the next person in the supply chain and then making the payment of taxes to the government. So what is happening over here? What is happening over here? There is shifting of burden which is happening. The burden is shifted by the manufacturer to the wholesaler, and the wholesaler is shifting it to the retailer. Retailer is shifting it to the final consumer. Retailer is shifting it to the final consumer. So no one is paying the tax from their own pocket. They will collect it from the next person in the supply chain. Then now, one of the beautiful feature of indirect tax is that there is no perception of direct pinch. Sir, what do you mean by this? There is no perception of direct pinch. Now, please understand this carefully. Say for example, please understand this carefully. Say for example, you are earning an income of 10 lakh rupees. This is your earnings. This is your earnings. You have to pay income tax of 1 lakh rupees. You are earning 10 lakh rupees, out of which government is telling me pay me 1 lakh rupees. Government is telling you what? Pay me 1 lakh rupees. So what is happening? Out of your earnings, out of your hard-earned money, government is taking 1 lakh rupees. So obviously there will always be a feeling that you are losing your money for nothing. There is a money which you are paying to the government for no additional benefit which you are receiving from them. See, for example, you come to Priya Saris. Okay, you purchase a sari worth rupees 1 lakh. Okay, you purchase a sari worth rupees 1 lakh, and assuming the GST rate is 10%. So how much GST will I collect? 10,000 rupees. So how much is the total amount which you have to pay? 1,10,000 rupees. Now here what happens is, you are purchasing a sari. When you are purchasing a sari, there is a tax of rupees 10,000 which you are paying. But at the time when you are paying this 10,000 rupees, no, you will not feel bad. Why, sir? Because you know, by paying this, at least I have got a sari. At least I have got a sari. But this 1 lakh rupees, no, this 1 lakh rupees which you are paying from your income is for something which you are not getting anything at all. Meaning you are paying 1 lakh rupees and not getting anything. So you will feel the pain of paying this tax. There is a pinch which is, you will feel that pain actually. In simple words, you will feel that pain of paying the taxes. So this is the only reason a lot of people refrain from paying income tax. They try to hide their income, or they collect the amounts in cash so that they don't serve the transaction at all, etc. But whereas in case of indirect taxes, it is not like that. In case of indirect taxes, if you are purchasing a product which is MRP based, so if I ask you what is the price of a Parle-G biscuit, you may tell 10 rupees. What is the price of Dairy Milk Silk, you may tell 50 rupees. What is the price of say a pizza, you will say 100 rupees. Now all these products which are there are MRP based. They are all inclusive of taxes. They are all inclusive of taxes. So you feel that this product is actually costing you 10 rupees. But the truth is not like that. It is, the actual cost is only 8 rupees, and 2 rupees an additional amount which they are collecting from you in the form of tax. But still you will not feel the pain because you are getting something in your hand. See, now government is collecting 1 lakh rupees from you as income tax, and if they say take this road, government is collecting income tax from you as 1 lakh rupees, and they say, Mr. Dilip, take this road belongs to you. That time you will not feel that, you will not feel bad. That time you will not feel bad. That happens in indirect taxes. In case of indirect taxes, what is happening? By paying the taxes, at least you know that you are getting some product, and it was your decision to collect this, you purchase this product. It was your decision to purchase a laptop. It was your decision to purchase a Parle-G biscuit. It was your decision to purchase a teddy bear for your girlfriend. By purchasing that product, you are paying some taxes. So you are getting something in your hand. You are getting something in your hand. You go to a salon, you are having a haircut. You can see that there is a difference. The person who was who went inside the salon and who came outside the salon is the same person, but there is a trimming of your hair, etc. happening. So there is something which you are getting. when you are paying indirect taxes. So you will not feel the pain of paying it. But whereas direct taxes, no, you are not getting anything. See, directly you are not getting anything. So in case of indirect taxes, when you are paying, purchasing a Parle-G biscuit, you know that you have Parle-G biscuit in your hand. In case of direct taxes, it is not like that. You pay 1 lakh rupees. For what purpose did you pay? There is no purpose at all. I mean, direct purpose you will not find. Therefore, there is a pinch in paying direct taxes. But in case of indirect taxes, there is no perception of that direct pinch. There is no such pinch. Directly, there is no such pinch. Then, one more feature of indirect taxes is that it is inflationary in nature. Sir, what do you mean by this is inflationary nature? Inflationary in nature means, say for example, there is a product on which you have to pay tax of 10%. The product is worth rupees 1 lakh. Additionally, you are paying, or else say, assuming I purchase a TV worth rupees 1 lakh and 28% is the GST rate on that particular TV. Now, you have to pay 28,000 rupees. So, the total amount which you have to pay for purchase of this TV is 1,28,000 rupees. 1 lakh is the base price, and 28,000 is the GST which you have paid. Now, because there is a GST which is collected by the government from you, because there is a indirect taxes which is collected by the government from you, the cost of this TV for you has been increased by 28,000 rupees. I hope you are understanding this. The amount which you are paying for this TV has increased by 28,000 rupees because there is a TV which is there is a tax which is collected by the government from you. So they say that indirect taxes are inflationary in nature. Because you are paying indirect taxes, you will have to pay more for the purchase of the product. Whatever product you are purchasing, it will increase the cost of that particular product. So only people oppose. Recently in the sense, in the month of January 2022, they had decided, from 1st January they had decided that all the clothes will be taxed from 5% to 12%. Presently, the clothes which you are wearing, they are taxable at 5%, and before that also it was taxable at 5% only. But from 1st January they had decided to tax at 12%. Now see, this is something which every individual needs. So if you are going to charge me 12%, a product which you are getting, say if you would have come to Priya Sarees and purchased a saree for rupees 10,000, I would have charged 500 rupees as tax and you would have paid me 10,500 rupees. Now, if you purchase the same saree from me, I will charge 1,200 rupees because the tax rate is 12%. So you will have to pay 11,200 to me. How much extra? 700 rupees extra. 700 rupees extra. Now by collecting 700 rupees extra, don't you think the government is actually creating inflation? Don't you think these indirect taxes are inflationary in nature? If the tax rate is more, the amount which you have to pay for that product will also increase. So the money which is going out of your pocket will also increase. So indirect taxes are inflationary in nature. Now, one more advantage of indirect taxes is that, or one more feature of indirect taxes is that it has wider tax base. Sir, what do you mean by this particular word, wider tax base? Now, say India has a population of 135 crore people. Okay, out of this 135 crore people, on an average, I think 5 crore people will be filing the income tax. Let us see. Let me turn on the internet. Let us see how many people are actually paying income tax. It is not everyone, not everyone. So the amount, the number of people who are paying income tax maybe only 5 crore. Only 5 crore people may be paying income tax. But whereas in case of indirect taxes, say there are 135 crore people in India and all these 135 crore people are paying, indirect taxes. They are all paying indirect taxes. Sir, how, sir? See, any person, be it a newborn baby, that person also is paying indirect taxes. Any person. If they say you have some child at your house who is 5 years, or a infant who is of 1 year, 2 years, etc., all these persons are also paying indirect taxes. You get some food for them, you get some say clothes for them, you go for some checkup, etc. For each and everything you are paying indirect taxes. For each and everything they are GST which is being collected. The rate may be different. Some products or services may be taxable at 5%, some may be taxable 28%, etc. But each and everything is taxable. Each and everything is taxable. Therefore, any person in India definitely would have at least had a Parle-G biscuit, definitely would have at least purchased a pencil, he would have at least purchased a pen if he is studying. For that pen, for that pencil, he is paying some taxes, he is contributing the money. So the number of people who are there who are contributing towards tax of indirect taxes is around 135 crore people on an average. Let me take, all the people in India are paying the taxes, whereas in case of direct taxes, it is not like that. Only some amount of people, those people whose income is less than those people whose income is more than 2.5 lakhs, only they are paying the taxes. And in that also many some deductions, exemptions, etc. and they pay less amount of taxes, etc. So indirect taxes has a wider tax base when compared to your all the other forms of taxes. Indirect tax has a wider tax base. It covers lot of people under that particular tax bracket. Then indirect taxes promotes social welfare. Sir, what do you mean by this, sir? Indirect taxes promotes social welfare. Now say this is what the government says, but actually whether it is true or not, we don't know. Sir, what does the government say, sir? They say that there are some products which are called as sin goods. There are some products which are called as what, sir? There are some products which are called as sin goods. How do I delete it? So there are some product which is called as what? Sin goods. On this sin goods, government is collecting more tax from you. On these products, government is collecting more taxes from you. For example, tobacco products, for example, cigarette, pan masala, etc. On these things, the rate of GST is 28%. Along with that, they are also collecting cess. They are also collecting what? They are also collecting cess. So these are the product which government wants people to consume less. Because the government wants less number of people to consume, how will they do it? By increasing the tax amount, by increasing the tax amount. So they are going to tax this product at an higher rate. If they are taxing this product at a higher rate, the number of people who are going to purchase this product will also be less. It will be less. So government says, I am promoting social welfare. Government says indirect taxes is promoting social welfare. There are sin goods on which I am going to collect huge number of taxes. Because I am going to collect huge number of taxes, the number of people who are going to consume that will also decrease. But actually whether it is happening or not, we don't know. Now see, normally those who smoke, they say that we smoke because of tension. Those who are smoking, or maybe because of enjoyment, etc. But mostly they say that because of some tension, etc. we are smoking. Now if the amount of tax which you are collecting is more, tension will come. Say for example, cigarette was taxable at 12%. Now they say that cigarette will be taxable at 28%. The person who is smoking will get tensed, and now because he is getting tensed, he will go and purchase a cigarette. I don't know, just a joke. So whether it is true or not, that is secondary, but that is what government is telling. Then the last feature of indirect taxes is that it is regressive in nature. Sir, what do you mean by this word regressive in nature? It does not care who you are. It does not care what is your income. The amount of tax which you have to pay will be same. Whether Mukesh Ambani or a beggar, they both will have to pay the same amount of indirect taxes. It does not discriminate. It does not discriminate. Both of them will have to pay the same amount of taxes to the government. They both will have to pay what, sir? Same amount of taxes to the government. So these are basically the important features of indirect taxes. What are the important features of indirect taxes, sir? So there is a memory technique to remember this, which is who is going to win the IPL this year, next year, whenever it is happening. Sir, RCB will win, sir. Who is going to win? RCB is going to win, sir. RCB win SR. Sir is SR. Okay. Who is going to win the IPL this year? RCB will win, sir. R for important source of revenue to the government. B for shifting of burden. C for taxes on commodities and services. W for wider tax base. I for inflation in nature. N for no perception of direct pinch. S for promote social welfare, and R for regressive nature. So what are the features of indirect taxes? Features of indirect taxes are RCB will win, sir. Features of indirect taxes are what, sir? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. W for wider tax base. I for inflation nature. N for no perception of direct pinch. S for promote social welfare, and R for regressive in nature. Regressive in nature. These are basically the features of indirect taxes. These are the important features of indirect taxes. Okay. Now, before actually starting the discussion on the concept of GST, etc., let us see some constitutional provision. Please note, we have not yet started the discussion on GST. We have not yet started the discussion on GST. This the GST discussion will start after this particular discussion on constitutional provision. Now, any tax, if the government has to collect, there should be a permission which the government should get. And who is the person who is going to give that permission? Prime Minister, President? No. The person who is going to, or the permission which the government has to get is from the Constitution of India. If the Constitution of India says that yes, you can collect this tax, then yes, you can collect that tax. If they say that you cannot collect tax on this particular say this particular item or product or activity, then you are not allowed to collect tax on that particular item or that particular activity. So it is the Constitution which has the supreme power, which is the binding force, which is going to tell you whether you can collect, which is going to tell the government whether they can collect the taxes or not, whether they can collect the taxes or not. So we are not going to see all the different articles of our constitution. We are going to see only those articles which are important from taxation point of view. Which are important from which point of view? Taxation point of view. So there are three articles: Article 265, Article 245, and Article 246. There are three important articles: Article 265, 245, and 246. So Article 245, 265, and 245, 246, and 265. Now, what is this Article 265 telling? Article 265 says, says no tax can be collected unless until there is an authority of law. Now, you are walking on the street, a person comes to you and says, hello, please pay me some tax. You will ask him, sir, what tax you want? He says, please pay me some tax. You will ask him, sir, why do you want tax from me? He says, please pay me some tax. You will then ask him, sir, what nonsense are you talking? I'm just walking on the road. You are telling me to pay some tax. You are telling me to pay some amount of taxes to you. What is the tax which you are collecting from me? Is walking on road also a form of activity, or it is a case wherein the government is collecting the taxes? Why do you need tax from me? And one of the important thing which you are going to ask is, who gave you the permission to collect the taxes from me? Who gave you the permission to collect the taxes from me? Therefore, a person cannot collect the taxes from you, or an authority cannot collect the taxes from you unless until they have got the permission, unless until there is an authority of law. No tax can be collected in India unless until there is authority of law. Say for example, we have tax on income, correct? On income, we pay something called as income tax. Now, I am a person who is a farmer. I am cultivating paddy. So this paddy is sold by me. I sell this paddy for say 50 lakh rupees. This particular year, I sold paddies worth rupees 50 lakh rupees. Then I am a person who is cultivating pulses. I sold these pulses for 20 lakh rupees. I am a person who is cultivating tomatoes. I sold these tomatoes for 10 lakh rupees. Okay, this is my selling price. Now the cost which is incurred by me is say, for paddy I incurred 30 lakh rupees, for pulses I incurred 8 lakh rupees, for tomatoes I incurred 7 lakh rupees. So if you see, net to net my profit is 20 lakhs, then 12 lakhs and 3 lakhs. So net to net my profit will become 35 lakhs. So I have made a total profit of 35 lakhs by doing what? Agricultural activity. I have made a profit of how much? 35 lakh by doing what? By doing agricultural activity. By doing agricultural activity. Though there is an income which is earned by me, this is an income on agriculture. It is an agricultural income, and the constitution says you cannot collect any taxes on agricultural income. You cannot collect any taxes on agricultural income. This is what government is telling. This is what the constitution, not government, constitution is telling. Therefore, if you would have seen your income tax law, they say income tax is a tax which you have to pay on all the sources of income except your agricultural income. Except your agricultural income. See, what I feel is in coming years, there will be a tax which will be collected on agricultural income also. 100% I feel this. Maybe not in say next near 5-10 years, etc. After that, definitely they will collect a tax on agricultural income also. Sir, how, sir? Constitution says you cannot collect. No, sir. They will amend this constitution. What government does, they will make the amendment in constitution, they will change as per the requirement, and they'll start collecting tax on agricultural income. Presently there is no tax, but why, sir? Why do you feel that in future they will collect? Because nowadays there is something called as organic farming which is increasing a lot. Okay, and this organic farming has huge margin in it. Meaning, if a normal farmer by selling tomatoes he makes 3 lakh rupees, in organic farming by selling the same amount of, say, if normally there is 100 kg, not 100 kgs, say 10,000 kgs of tomatoes which is sold for rupees 10, say sold for rupees 10 lakhs. 10,000 kgs is sold for rupees 10 lakhs. The same tomatoes, 10,000 kgs of organic farming tomatoes will be sold for rupees 50 lakhs, or it may be sold for rupees 1 crore. So there is huge income which the government is seeing, and people are also earning. Presently also people are earning on this through organic farming, etc. Now, so government may feel that there is huge amount of money which these people are making, let us tax them, and there may be companies which will be formed doing agricultural activity. Nowadays, presently only we see farmers and the people in the village area who are doing agricultural activities, but in future it will happen that companies, there will be registered companies doing agricultural activities, and they may also be listed. We don't know, anything can happen. So yeah, we were here, 265. Sir, why did we discuss this? Because Constitution says you cannot collect tax on agricultural income. Therefore, income tax is collected on all income except agricultural income. So why is that happening? Because there is no power given by Constitution. Article 265 says you cannot collect any taxes unless until you have a power to collect that particular taxes. Then we have Article 245. We have one more article called as 245, which talks about the power to make law. They say central government or the parliament has the power to make law for whole of India or any part of India. So it is the central government which can make the law for whole of India or any particular part of India. It is the parliament. It is also called as parliament. So central government or parliament has the power to make the law for whole of India or any part of India. Who can make the law? Central government. Similarly, the state government has the, or legislature of state has the power to make law for whole or any part of that particular state. Meaning, the central government or the parliament can make law for entire India starting from Jammu Kashmir to Kanyakumari. But the state government of Karnataka can make law only in Karnataka. Central government or the parliament has the power to make law for whole of India, or they can make the law only for Karnataka. They can make the law only for, say, northeastern states, etc. So they can make the law for whole of India or any particular part of India. Similarly, state government has the power to make law for whole of that particular state or any part of that particular state. So many during the COVID, central government came out and told that there will be a nationwide lockdown. So entire India will be locked down for 14 days, which increased to 21 days, etc., etc. This power only who has? Central government has to make the law for entire India, whole of India. Similarly, you would have seen state government. After that also, after that during the May month, after May month also the lockdown continued in some state. Why? Because that particular state government had the power to make such kind of law. Who is telling this? Who gave the power to that central government or the state government? Article 245. Article 245 gave the power. Article 245 says what? If you want to make the law for whole or any part of India, central government, you can make. If you want to make the law in your particular state, then only the state government can make. Sir, but why are we discussing this? Wait. We'll come to that. We'll come to that point. Now there is one more article called as Article 246. Article 246 has something called as Schedule 7. This Schedule 7 talks about 3 lists. Article 246 has something called as Schedule 7. This Schedule 7 has something called as, talks about 3 lists. Which are these 3 lists, sir? Union list, state list and concurrent list. Sir, what is this union list, state list, concurrent list? Union list contains various different activities, or union list contains various different things in respect of which only the central government can make the law. They have listed various different activities in respect of which who can make the law? Only the central government can make the law. Similarly, state list contains various different activities in respect of which the legislator of the state, the exclusive power is given to whom? Legislature of the state to make the law. And concurrent list does not talk about any tax law, but they talk about general law for the betterment of India, wherein both central government and state government can jointly come together and make a tax law. Now please note, whatever is there in state list, on that particular matter, central government has no power to decide. Whatever is there in union list, on that particular matter, state government has no power to decide. Whatever is there in concurrent list, on that both central government and state government can jointly come and make the law. For example, income tax is collected by central government. The amount which you are paying is going to central government. For example, say custom duty. It is collected by basic custom duty, etc. It is collected by central government. Whatever amount you are paying, it is directly going to central government. Similarly, state government also collects some types of taxes called as VAT. I mean, presently VAT is collected only on a few products. So VAT, who has the exclusive power? Can central government collect VAT? No. Only state government can collect VAT. Similarly, there is tax on alcoholic liquor for human consumption. So alcoholic liquor for human consumption, exclusive power is given to state government. Central government cannot collect tax on alcohol. Central government has no power. So this is the reason why this alcohol which you are purchasing Karnataka may be at a higher price when compared to Goa, and it may be with other states also. So the same alcohol if you are purchasing Karnataka and the same alcohol if you purchase in say Goa, the price which you have to pay will be completely different. And there are some states which are dry states. For example, Gujarat, you cannot sell alcohol at all. I mean, see, though it is a dry state, there are liquor shops where alcohols are actually sold. There are liquor shops where alcohol is sold. It is not actually sold to general public. See, Gujarat is also famous. See, this is actual truth. Normally, if you Google it, you will find that Gujarat is dry state wherein you will not find alcohol. But I had been to Gujarat wherein I saw that there are liquor shops which are available. Then generally when I asked people around there, sir, Gujarat is a dry state, why even then all liquor shops are available? They said that, sir, now Gujarat is also famous for tourism purpose. Now because it is also famous for tourism purpose, the tourist who comes from outside India, for them it is the requirement. I mean, maybe there are tourists, people coming from say US, etc. On daily basis they need alcohol. On daily basis, maybe it is their habit, etc. Okay, for them, if they should show their passport, visa, etc., they should show it properly, and for them these liquors are actually sold because it is their need. They require it on daily basis, but normal person cannot go and purchase it. Yeah, so whatever matter is there in the state list, on in respect of that only the state government can make the law. Whatever matter is there in the union list, in respect of that only the central government can make the law. Concurrent list does not talk about any tax law, it talks about general law. Say for example Indian Penal Code, say for example any say Women Protection Act is passed, etc. Child Labor Act is passed, etc. So this is something which is common, which will be commonly applicable for central government as well as state government. Therefore, they both will jointly come and make this particular type of law. Please note, concurrent list does not talk about any tax law. It does not talk about any tax law. Now, sir, okay, whatever you discussed, we understood a little bit, but sir, why did you discuss this? Oh sir, why did you discuss this particular thing, sir? We discussed this particular thing because government wanted to introduce something called as GST. Now, before GST, we had something called as service tax, we had something called as excise duty, we had something called as central sales tax, etc., which was collected by central government. Similarly, we had something called as VAT, we had something called as luxury tax, entertainment tax, tax on lottery, betting and gambling, etc., which was collected by the state government, meaning if you sell a sari, on sale of sari, say at the time of manufacture you have to pay excise duty which was going to the central government, and for each and every subsequent sale they were collecting VAT which was going to state government, Similarly, if there is any service provider, the entire amount of revenue was going to central government. Now, sir, correct, okay, but why are you discussing this, sir? We are discussing this because in our entire constitution, there was not even a single article. See, we had article 265, 245, 246, etc. But there was not even a single article which was telling that both central government and the state government can jointly come together and make a tax law. There was not even a single article in our entire constitution which gave the power to both central government and state government to come together and make a tax law. Because there was no such power, what is required to be done? Because there is no such power in the entire constitution. See, I told you, in the sense article 265 told us that no tax can be collected unless until there is an authority. So unless until you get the permission, you cannot collect the taxes. So with respect to GST, there was no permission. See, GST is a tax which is collected by both central government as well as state government. We'll come to that point. Now, but in our entire constitution, there was no such particular article which said that both central government and state government can jointly come together and collect the taxes. Therefore, what happened? An amendment was made in our constitution. And Constitution's 101st Amendment Act 2016 was passed. An amendment was made in our constitution, and by this amendment, by this Constitution 101st Amendment Act 2016, they introduced various different articles, and one such article is Article 246A, and one such article is what, sir? Article 246A. Now, what did this Article 246A told? This Article 246A told that now the central government as well as the state government can jointly come together and make a tax law and make laws with respect to goods and services tax. Now it is Article 246A which gave the permission to the parliament and the legislature of the state, that is the state government as well as the central government, to jointly come together and make a tax law, and to jointly come together and make a law with respect to goods and services tax. And this article also told that in respect of interstate supply, see, presently we don't know what is interstate supply, intrastate supply, etc. We'll ignore that. We'll come to that discussion. They said that in respect of interstate supply in simple words means supply made from one state to another state. Only the central government has the power to make law. Now, with respect to GST, both central government and state government can jointly come together and make various different laws which is required. And in respect of interstate supply, only the central government or the parliament has power to make such law. Now, please note, how did the power of making GST. How did this GST came into existence? GST came into existence by making an amendment in our constitution, and that amendment was made through Constitution 101st Amendment Act 2016. By that they introduced various different articles. One such article is Article 246. This Article 246 told that central government and state government can come together and make a tax law with respect to GST, and in respect of interstate supply only central government can make the law. So I hope you have understood now why we discussed all this story. So Article 246A says what, sir? Central government and state government has power to make laws with respect to goods and service tax, and central government has exclusive power to make law in respect of interstate supply. Now, because central government has exclusive power to make law with respect to interstate supply, they also introduced one more article called as Article 269A, which exclusively talks about interstate supply, which said that central government has the power to make law with respect to interstate supply. In case of interstate supply, you will have to pay a type of tax called as IGST. So for knowing whether a particular transaction is interstate supply or intrastate supply, there is a concept called as place of supply. In respect of that particular place of supply, only the laws can be made by the central government, etc. Who gave that power? Article 269A. This Article 269A exclusively talks about interstate supply. What does it say? IGST will be collected on interstate supply. It will be levied by central government. It will be levied by whom, sir? Central government. And that IGST will be distributed by central government to central government as well as the consumer state. And there was one more article, Article 279A, about which we'll discuss at the end. Article 279A, which is one of the important article which talks about what, sir? GST Council. In simple words, various different decisions with respect to GST is required to be taken. Who is the person who is going to take such decision? Is it Nirmala Sitharaman? Now, Nirmala Sitharaman may not be so much so qualified to make law with respect to GST, etc. So she has formed a council. She has brought people from all the different states, people from central government who have good knowledge about tax laws, etc. And they have formed a council which is called as GST Council. This GST Council is going to give recommendation to the government, and accordingly that particular law is will be made. Accordingly that law will be made. Let me discuss this point because we have already started. So what is GST Council? Actually, GST Council is a group of members which will consist the members of central government as well as state government. They will come together and they will give recommendation. For example, this particular product is required to be taxed from 5% to 12%. This product is required to be taxed at 18%. This product is not required to be taxed at all. Who is deciding all those things? It is the GST Council. GST Council will decide all those things. They will have a meeting. They will decide all those things, and they are going to give that recommendation to whom? They are going to give that recommendation to the government, and accordingly if the recommendation is accepted, then that is made as law. For example, there is a limit of 20 lakhs. Only if your turnover is crossing 20 lakhs, you will have to take registration under GST law. So if your turnover is less than 20 lakhs, sir, no registration required. No registration required. Now, who gave this recommendation? Why did they fix 20 lakhs only? All those recommendation is given by GST Council. So GST Council was constituted on very important. GST Council discussion is very important. Discussion is very important in the sense, from exam point of view, they can ask a question on GST Council. It was constituted on which date, sir? 15th September 2016. 15th September 2016. Now, it is a joint forum which consists of members from central government as well as state government. It contains the members from the state government as well as central government. The Union Finance Minister. Who is that Union Finance Minister? Presently, it is Nirmala Sitharaman. Union Finance Minister is the chairperson of GST Council. She will be the chairperson of GST Council, the Union Finance Minister, and it will also have other members in the GST Council. Who are these other members, sir? These other members are normally the people who are in charge of revenue department at, say, central level, and the ministers who are in charge of say taxation or finance department at state level, or any other person who is recommended by the state government. These people all together will be called as members of GST Council. These other people, please note, there is chairperson and there are members. Who is the chairperson? Chairperson is Finance Minister of India. So Union Finance Minister will be the chairperson. And who are these other members? These other members are the members in charge of revenue, in charge of, I mean they are ministers in charge of revenue, or they are ministers in charge of finance from central as well as state, and other people whom the state government may recommend. For example, state government may say Karnataka government may say, in our from our Karnataka, Dilip will be representing us in the GST council. They say that Dilip is highly qualified for making decisions, etc. So we are sending Dilip, who is a chartered accountant, for representing us in the GST council, etc. So any other person who is appointed by that or representing a particular state, these people are called as members of GST council. Now these members can elect one among them to be the vice chairperson. So one among these members will be called as vice chairperson. So chairperson is the union finance minister, and there will be members. These members can have one person among them to be called as vice chairperson. Now sir, you said everything is decided by the GST council. GST council will make decision and they are going to give the recommendation. How will they make decision, sir? They are going to make decision by conducting a meeting. Sir, meeting, yes. So whenever there is a meeting, there will always be a point that, sir, how many members are required to be present in a meeting? For example, there are 50 members in GST council. Now sir, is it required that all these 50 members are required to be present for conducting a meeting? No such it is not that everyone should be there. The quorum, that is the minimum number of people who are required to be present to hold a meeting to be valid in GST council is 50%. So half of the total number of members, or 50% of the total number of members, or half of the total number of members are the quorum of GST council. So if there is 25 or more than 25 members present in a particular meeting, then it is a valid meeting. So the quorum of GST council meeting is how much, sir? Half of the total number of members. Sir, how are they going to pass a decision? There is a voting mechanism which will happen. Wherein they are going to take majority of 3/4 of they are going to take majority. How will they calculate this majority? They are going to calculate this majority by taking, so they are going to take what, sir? Majority. How are they going to take this majority? They are going to take this majority by calculating 3/4 of weighted votes of members present and voting. So they are going to have a meeting. In that meeting, they are going to see how many members are present. Assuming there are 30 members who are present. Now, will they take the 30 members vote? No. They are going to see out of these 30 members, how many members are voting. Assuming only 26 are voting. So for these 26 members, they are going to assign some weight. There are weights for central government members as well as state government members. So they are going to assign some weights, and they are going to calculate weighted number of votes. And for that weighted number of votes, they are going to take 3/4 or 75% of that. So is it the members who are present in the meeting? No. They should be present as well as voting. So if a member is absent in a particular meeting, can I treat that an vote is passed? No. That person should be present in that particular meeting, and then there should be a vote which should be cast by him. Only then it will be counted. So there should be members who are present and voting. For that particular votes, they are going to take weighted average of that, and they are going to multiply it by 3/4, and they are going to see the majority. Sir, what is the weight, sir? Weight is 1/3 for members of central government and 2/3 for members of state government. This is the weights. Okay, so this completes our discussion on 279A. There is a power cut issue. So I'll continue the class after. We'll continue the class in next. Yeah, so welcome back. Let us continue our discussion. So sorry, there was a small power cut issue. So now we have some theoretical discussion which is left over. Yeah, before discussing the deficiencies, benefits, etc., let us understand the meaning of interstate supply and intrastate supply. Now, there is something called as interstate supply, and there is something called as intrastate supply. interstate supply and intrastate supply. Now, if you ask a layman what do you mean by interstate supply and what do you mean by intrastate supply, he will say that interstate supply means supply between two different states, or supply between two different union territories, or supply between one state and one union territory. Meaning, if any goods or services are supplied from Karnataka to Tamil Nadu, it is interstate supply. If it is supplied from, say, Andaman Nicobar to Diu Daman, it is interstate supply, say from one state to another state, from one union territory to another union territory. Or if it is supplied from a state to an union territory, from, say, for example, from Maharashtra it is supplied to Andaman Nicobar, then I will call it as what, sir? I will call it as interstate supply. I will call it as interstate supply. So then what do you mean by intrastate supply, sir? Intrastate supply means supply within same state or same union territory. This is the general meaning of interstate supply or interstate supply and intrastate supply. Intrastate supply means I am supplying within Karnataka, say from Bangalore to Mysore. I am supplying within Maharashtra from Mumbai to Pune, etc. So that I will call as interstate supply, within intrastate supply, within the state or within the same union territory, from one place in Andaman Nicobar to another place in Andaman Nicobar. Such kind of transaction I will call it as intrastate supply. Okay, this is the general understanding of people. This is the general understanding. If you ask any person about inter and intrastate supply, I think he will be able to answer this point. But what is the actual definition telling? The definition of inter and intrastate supply is given in your IGST law. It is given where, sir? It is given in the IGST Act. And what does it say? IGST law 2017, it gives the meaning of interstate supply and intrastate supply. It says interstate supply means a supply of goods or services or both where the location of the supplier and the place of supply of goods or services or both where the location of the person who is supplying, location of the supplier and the place of supply, the place where the goods are supplied is at two different states, is at two different union territory, or is it is in one state and one union territory. Meaning the location of the supplier is in one state and the place of supply is in another state. The location of the supplier is in one union territory and the place of supply is in another union territory. The location of the supplier is in one state and the place of supply is in some union territory. That type of transactions will be called as interstate supply. And it does not stop over there only. It also says that export of goods and services will also be treated as interstate supply, and import of goods and services will also be treated as interstate supply. There is one more point which says if you are making a supply to an SEZ unit or SEZ developer, if you are making supply to whom? SEZ unit or SEZ developer, then I am going to call that also as an interstate supply. I'll repeat. The main discussion lies here, okay? The main discussion is this particular point. If the location of the supplier and the place of supply is in two different states or two different union territory, or it is in one state and one union territory, then I am going to call the transaction as what, sir? I am going to call the transaction as an interstate supply. Similarly, if I am exporting any goods outside India, from say from Bangalore I am exporting goods to London, if I am exporting any services to outside India, then that type of transaction will also be treated as interstate supply. Similarly, if I am importing any goods from outside India or importing any services from outside India, that type of transaction will also be treated as interstate supply. Now, one more beautiful point over here is if you are making a supply to an SEZ unit or SEZ developer, if you are making a supply to an SEZ unit or SEZ developer, those transactions will also be treated as interstate supply. See, normally what government does is, say, assuming this is Bangalore, okay, assuming this is Bangalore, in Bangalore only there will be some locations, okay, in Bangalore only there will be some location which will be treated as SEZ location. the government of Karnataka is going to call some areas in that particular state as SEZ location. Please note, it is in the state of Karnataka only. This is in state of Karnataka. Okay, it is there in every state. I mean, even in your state, there will be SEZ areas. Now, please understand this carefully. There is Priya sarees in one area of Bangalore, which is a non-SEZ location. There is Priya sarees in one area. Priya sarees is located in one of the areas in Bangalore, which is not an SEZ location. And there is also a company called as Infosys, which is located at SEZ area. Please understand, both of them are in Bangalore only. Priya sarees is in non-SEZ area and Infosys is in SEZ area, and Infosys is in SEZ area. Now, if Priya sarees from non-SEZ location in Bangalore is supplying goods to Infosys in SEZ location in Bangalore, this type of transaction will also be called as interstate supply. Sir, how, sir? It is in same state. No, sir. Yes, I understand that. I understand that it is in same state or same union territory. But still, the definition specifically says if the supply is made to an SEZ unit or an SEZ developer, then I am going to call it as an interstate supply. I am going to call it as an interstate supply. This is something which is important to note, because this is a supply which is made in the same place, same state, but still it is called as interstate supply, and accordingly the taxes will change. Now, whenever a transaction is an interstate supply, which state? Interstate supply. Whenever the transaction is between two different states, two different unitary, one state, one unitary, or export of goods or services or import of goods or services, then I am going to pay a tax called as IGST. Government is going to collect a tax called as what, sir? IGST. Whenever there is an interstate supply, the tax which a person has to pay will be called as an IGST. It will be called as what, sir? IGST. Similarly, we have something called as intrastate supply. When do I call a particular transaction as an intrastate supply? If the location of the supplier and place of supply is in same state or same union territory. The definition is so small, very easy definition. So if the location of the supplier and the place where the supply has been made, it is in the same state or in the same union territory, then I am going to call the transaction as what? I am going to call the transaction as an intrastate supply. So if it is in the same state, if the location of the supplier and place of supply, if it is in the same state, then I am required to pay a tax called as CGST and SGST. So if the supply is made in same state, if the location of supplier and place of supply is in same state, then CGST and SGST is the tax which is required to be paid by you. And if the location of the supplier and place of supply is in same union territory, I am required to pay a tax called as CGST and UTGST. I am required to pay a tax called as what? CGST and UTGST. I hope this particular discussion is very clear to you all. I'll repeat this discussion. We are presently discussing about the concept called as interstate supply and intrastate supply. Sir, what do you mean by interstate supply? I will call a particular transaction as an interstate supply if the location of the supplier and the place of supply is in two different states, two different union territory, or one state and one union territory, or it is a case of import of goods or services, or it is a case of export of goods or services, or the transaction is an supply to an SEZ unit or SEZ developer. These types of transactions or activities will be called as what, sir? Interstate supply. Whenever there is an interstate supply, the tax which you have to pay is called as what, sir? IGST. Similarly, we have something called as intrastate supply. Now, intrastate supply, I will call a particular transaction as an intrastate supply if the location of the supplier and the place of supply is in same state and same union territory. If it is in same state, I have to pay something called as CGST, SGST, same union territory, CGST, UT, GST. Okay. Now, since we have understood the meaning, the basic meaning of interstate supply and intrastate supply, what we have to know is, it is the location of the supplier and place of supply which is important. It is the location of the supplier and place of supply which is important for determining inter and intrastate supply. Location of recipient, where the recipient is located, is not at all important. We don't have to care about the recipient's location. Where the receiver is there, sir, I don't care where the receiver is there. If the supplier, the location of the supplier and place of supply is in two different states, interstate. If it is in same state, intra-state. For example, we'll take some cases. Now, before taking the examples, let us understand what do you mean by union territory. Now, the definition of union territory says, union territory includes, the definition of union territories gives the list of union territory. There is definition of state which is given. State definition says state includes union territory with separate legislature. Now they have given the definition of state. The state definition says that the state includes an union territory with a legislation, a union territory which can have its own government. So now the question is, sir, how many union territories we have in India and which are those union territories? How many union territories we have in India and which are those union territories? Now, as per our civics classes which we had in our say class 8, 9, 10 in social studies, it was divided into social, history, civics and geography. Okay, as per that civics and geography, union territories. Which are union territories, sir? Delhi is an union territory. Jammu and Kashmir is an union territory. Puducherry or Pondicherry is an union territory. Similarly, Andaman Nicobar is an union territory. Lakshadweep is an union territory. Then Diu Daman and Dadar Nagar Haveli is an union territory. Then Ladakh is an union territory. Then Chandigarh is an union territory. So these are the union territories which are there in India. These are the union territories which are there in India. Now what has happened in the year 2019? In December 2019, what they have done, the state of Jammu and Kashmir, the Jammu and Kashmir state which was there, the state of Jammu and Kashmir was divided into two arrow marks. It was divided into Jammu Kashmir and Ladakh. It was divided into Jammu Kashmir and Ladakh. Now both of them, before it was the state of Jammu and Kashmir, now they have been made into Jammu and Kashmir and Ladakh. It is divided into Jammu and Kashmir and Ladakh, and they both are called as union territory. They both are called as union territory. Similarly, in the same year, we had two different union territories, Diu Daman and Dadar Nagar Haveli. They have been merged into one union territory. Okay, they have been merged into one union territory. But see, in simple words, these are the union territories which is listed over here. Which are the union territories? Delhi, Puducherry, Jammu and Kashmir, then Andaman Nicobar, Lakshadweep, Diu Daman, Dadar Nagar Haveli, Ladakh and Chandigarh. These are the union territories which are there in India. Sir, okay, but why have you written at two different places, sir? What is the reason of writing it in two different places? What is the reason of writing one in blue color and one in black color, sir? Now, Normally, union territories are those locations which does not have their own government. For example, if I ask you who is the chief minister of Karnataka, you will have an answer. If I ask you who is the chief minister of Gujarat, you will have an answer. If I ask you who is the chief minister of Kerala, you will have an answer. But if I ask you who is the chief minister of Andaman Nicobar, there is no chief minister. Who is the chief minister of Lakshadweep? There is no chief minister. Who is the chief minister of Chandigarh? There is no chief minister. But sir, Delhi is an union territory. No sir, correct. Sir, Delhi has a chief minister, Arvind Kejriwal. Correct. That is the reason I have divided them into 2 arrow marks. Now, there are 3 union territories. Which are those 3 union territories? Delhi, Jammu and Kashmir and Puducherry. There are 3 union territories which can have their own legislature, meaning they can make their own government. These 3 union territories can make their own government. These 3 union territories can make their own government. Which 3? Delhi, Puducherry and Jammu and Kashmir. They can conduct election and they can form their own government. Now, because these 3 union territories, though they are union territories, because they can have their own government, they will be regarded as state for the purpose of GST law. For the purpose of GST law, I will be calling them as what, sir? State. Similarly, we have other union territories. Andaman, Nicobar, Lakshadweep, Diu, Daman, Dadar, Nagar Haveli, Ladakh and Chandigarh. They cannot have their own government. Sir, then how are they run, sir? Normally, the President of India is going to appoint an Lieutenant General over there, and he is going to take care of various different activities over there. Now, because these areas, Andaman, Nicobar, Lakshadweep, etc., they cannot have their own government, and the president is going to appoint someone and who is going to take care of all the different matters over here. They are not regarded as state. They are regarded as union territory only. They will be regarded as union territory only. Sir, okay. But why, sir, this discrimination? Why are you saying that these are called as states and these are called as union territory? It is because if you are making a supply within the state, within Delhi, within Jammu and Kashmir, within Puducherry, you have to pay a tax called as CGST and SGST. Please understand this carefully. When there is a supply which is made in the union territory of Delhi, though it is an union territory, you will have to pay something called as CGST and SGST. CGST and UTGST. Why? Because for the purpose of GST law, they are regarded as state. Sir, what if I make a supply within Ladakh, sir? Then I have to pay a tax called as CGST and UTGST. Now, I'll repeat once. Please understand this carefully. I'll repeat everything once again. There is something called as interstate supply and there is something called as intrastate supply. What is interstate supply? If the location of supplier and the place of supply is in same state or same union territory, or what is interstate supply? If the location of the supplier and place of supply is in 2 different state or 2 different union territory, or from one state to another union territory, or it is a case of import of goods or services, or it is a case of export of goods or services, or it is a supply which is made to an SEZ unit or SEZ developer. So whenever there is an interstate supply, the tax which you have to pay is what, sir? The tax which you have to pay is IGST. Similarly, we have something called as intrastate supply. What do I call which transactions are treated as intrastate supply? If the location of the supplier and the place of supply is, if the location of the supplier and the place of supply is in same state or same union territory, I will call them as intrastate supply. And whenever there is an intrastate supply, if it is in the same state, CGST, SGST. If it is in same union territory, then CGST and UTGST. We understood what are the different union territories, and then we saw that there are 3 union territories, Delhi, Jammu, Kashmir and Puducherry, which are regarded as state for the purpose of GST law, and therefore if you make a supply within these union territories, you have to pay a tax called as, or you will have to collect a tax called as CGST and SGST. It is not CGST and UTGST, it is CGST and SGST. And for other union territories, it is simple, CGST and UT GST. I hope this point is very clear to you all, because in examination most of the students do this type of mistake wherein there will be a supply from one place in Delhi to another place in Delhi. They will write the answer as CGST and UT GST, which will be wrong. Now let us take some example to understand this concept completely. I will take location of supplier, I will take location of recipient, I will take place of supply. You are supposed to tell me what is the nature of supply, meaning whether it is an interstate supply or intrastate supply, and what is the type of tax which we have to pay. Now point number 1, location of the supply, location of the supplier. The supplier is located in Bangalore, the recipient is located in Mumbai, and the place of supply is also in Mumbai. Bangalore is in Karnataka, Mumbai is in Maharashtra. Okay, now the question is, what is the nature of this particular supply? Supplier in Bangalore, Karnataka, recipient is in Maharashtra, but I don't care where the recipient is located, because I should check location of supplier and place of supply. Place of supply is in Maharashtra, therefore it is an interstate supply. Therefore it is what, sir? Interstate supply. And the type of tax which you have to pay is IGST. The type of tax which you have to pay is what? IGST. Then question number 2. Supplier is located in Bangalore, Karnataka. Recipient is located in Hubli, Karnataka, and the place of supply is also in Hubli, Karnataka. Place of supply is also in Hubli, Karnataka. Now what is the nature of this particular supply? Sir, it is intrastate supply, because the supplier and the place of supply is in the same state, and I have to pay something called as CGST and SGST. I have to pay something called as what, sir? CGST and SGST. Then location of the supplier is in Bangalore, Karnataka. The place of supply, the location of recipient, recipient is in Mysore, Karnataka. Please note, supplier is in Bangalore, recipient is located in Mysore, the place of supply is Wayanad, Kerala. The place of supply is what, sir? Wayanad, Kerala. Now what is the nature of this particular supply? Sir, we should see location of the supplier and the place of supply. Sir, location of supplier is in Karnataka, place of supply is Kerala, therefore it is what, sir? Therefore it is in two different states. Because it is in two different states, this transaction is called as what? Interstate supply. Because it is an interstate supply, the tax which I have to pay is IGST. Please note, though the recipient is located in same state, the tax which you have to pay is different. The tax which you have to pay is different. Why? Because it is not the recipient's location which is seen while checking whether it is an interstate supply or intrastate supply. So I hope this point is very clear to you all now. Then location of supplier is in Hyderabad, Telangana. Place of supply is in Delhi. Location of recipient is in Delhi and place of supply is also in Delhi. What type of supply is it? Sir, it is interstate supply. And what do you have to pay? Sir, I have to pay IGST from one state to another union territory or another state. Therefore, it is interstate supply. IGST is required to be paid. Then supply is made from Surat, which is in Gujarat. Supply is made from Surat in Gujarat. Location of supplier is Surat in Gujarat. Location of recipient is in Jaipur, Rajasthan. And the place of supply is in, say we'll take place of supply, we'll take Chennai, which is in Tamil Nadu. So the supplier is located in Gujarat, recipient is located in Rajasthan, but the place of supply is in Tamil Nadu. What is the nature of supply? So the nature of supply is interstate supply. And what type of tax you have to pay? So the tax which is required to be paid to the government is IGST. The tax which is required to be paid to the government is IGST. Next, location of supplier is in, say, one place in Ladakh. Supplier is located in Ladakh, recipient is located in Andaman Nicobar, and the place of supply is also Andaman Nicobar. So the supply is made from one union territory to another union territory. It is what type of supply? It is an interstate supply. And what is the tax which you have to pay? Sir, I have to pay IGST. I have to pay what, sir? IGST. Similarly, supplier is located in Ladakh. Okay, we'll change this. Supplier is located in Diu and Daman. Recipient is located in Dadar and Nagar Haveli. Place of supply is also Dadar and Nagar Haveli. Supplier is in Diu Daman. Recipient is located in Dadar Nagar Haveli, and place of supply is also Dadar Nagar Haveli. Now this is a type of supply which is made in same union territory. Please note, Diu Daman and Dadar Nagar Haveli are one union territory. Before they were different, but now it is merged. But now it is what, sir? Now it is merged. So they are in the same union territories. So the nature of this particular supply will be intra union territory supply, and I have to pay something called as CGST and UT GST. CGST and UT GST. Sir, what if I make a supply from Chennai to a person in Puducherry or Pondicherry? What if I make a supply from Chennai, which is in Tamil Nadu, to a person in Puducherry? That transaction will be interstate supply, and you will have to pay IGST. Please note, Chennai, Tamil Nadu is separate, and Puducherry is also separate. Tamil Nadu is a state and Puducherry is union territory which can have their own government. Then, yeah, sir, what if there is a supply which is made in from one place in Delhi to another place in Delhi? Location of supplier is in Delhi, place of supply is also in Delhi. What type of transaction it is? It is interstate supply, not intrastate supply, and the tax which you have to pay is CGST and SGST. CGST and SGST. Why? Because Delhi, Jammu and Kashmir and Puducherry are regarded as state for the purpose of GST law. And then, say, if I am exporting from India, from Bangalore, the goods are going to London, then it is interstate supply. Similarly, from London, the goods are coming to Bangalore, then it is interstate supply. I hope this concept of inter and intrastate supply is very clear to you all. Very simple, but very important as well. Very important, because each and every question which is asking you to compute the tax amount will have these points. I mean, they will give the supplier's location, they'll give the recipient's location. You will have to not say that GST payable is 10,000 rupees. No, you will have to write whether it is IGST 10,000 rupees or CGST 5,000 and SGST 5,000 rupees. Accordingly, you will have to write your answer. Okay, so this completes our discussion on one of the most beautiful topic, which is CGST, SGST, IGST, that is interstate supply and intrastate supply. Now, there are different taxes which is levied under GST law. Tax type 1 is CGST. When is CGST levied? Whenever I am making an intrastate supply. Whenever you are making what type of supply? Intrastate supply. Sir, what do you mean by CGST? Central Goods and Services Tax. CGST means Central Goods and Services Tax. It is levied whenever there is an intrastate supply. It is levied whenever there is an intrastate supply, and the amount is collected by whom, sir? Central government. Then we have SGST. What do you mean by SGST? State Goods and Services Tax. It is collected by whom? The state government. And when does the state government collect this? Whenever you are making an intrastate supply. Then we have something called as IGST. When is this IGST? What do you mean by IGST? Integrated Goods and Services Tax. Integrated Goods and Services Tax. It is collected by whom? It is collected by the central government. When the central government is going to collect IGST? Whenever you are making an interstate supply. Now, this IGST which is collected, actually entire amount will be collected by central government. See, CGST whatever is collected, entire amount will be collected by central government, and the amount will also go completely to central government. SGST whatever is collected, entire amount will be collected by the state government, and the amount will completely go to state government. Whereas IGST is collected in case of interstate supply. The entire amount will be collected by the central government. The central government is going to distribute this amount or divide this amount between itself, that is central government and the consumer state. It is going to apportion this amount. IGST is apportioned between the central government and the consumer state, meaning 50% will go to the central government and 50% will go to the consumer state. And then we have UTGST, Union Territory Goods and Services Tax, which is collected by the Union Territory without legislature, without state legislature, which cannot have its own government. Yeah. So this completes our discussion on this beautiful topic called as inter and intrastate supply. Please note, GST extends to the whole of India. I mean, even the state of Jammu and Kashmir, GST is applicable. So everywhere in India, GST is same. So it is not, see, before we had this concept of VAT, I mean, which we'll discuss now in a while, wherein VAT in Karnataka was not equal to VAT in Tamil Nadu. The VAT in Karnataka was not equal to the VAT in Gujarat, because the state government was making law. But now, whether you are in the state of Karnataka, Tamil Nadu, Gujarat, Jammu, Kashmir, say you are in Nagaland, etc., it does not matter. Everywhere this particular beautiful law, GST law is same. Everywhere the law is same. Everywhere the law is same. So a person learning GST law can practice anywhere in India. Now let us understand why GST law came into existence. Why GST law came into existence? See, a new law will come into existence only if the old law is not proper. A new law will come into existence only if the old law is not proper. So what was the deficiencies in the existing indirect tax regime which was there? What were the deficiencies in the existing indirect tax regime which made the GST law for emerging or coming into existence? Now we'll take one simple example. I'll not take some high funda big example. We'll take one simple example. Now what used to happen before GST law? Before GST law, what used to happen is, I took my girlfriend to an 5-star restaurant. Before GST law, I took my girlfriend where, sir? I took my girlfriend to a 5-star restaurant. Sir, what did you do over there? I took her there for a beautiful candle light dinner. Sir, with girlfriend, sir? Yes. Whose girlfriend? My girlfriend. Candle light dinner. Now, we ordered for 2 dosas. We ordered for what, sir? We ordered for 2 dosas. We ordered for 2 dosas and they charged us 1000 rupees. They charged us how much? 1000 rupees. We ordered for 2 dosas and for those 2 dosas they charge what, sir? They charge 1000 rupees. Now, for these dosas, they collected something called as VAT. Because these dosa are movable, they are coming from one place to another place, etc. For this dosa, they collected, for easy calculation, let us take all the different types of tax rate to be 10%, because calculation will be very easy. So they collected something called as VAT. So I had to pay how much VAT on these dosas? 100 rupees VAT I have to pay. So how much my total price became? 1100 rupees. Now there is a person who is preparing this dosa for me. There is a person who is getting this dosa for me. For that they collected something called as service tax. First, for dosa they collected VAT. Now because there is a service which is given to me, someone is preparing this dosa for me, someone is coming and bringing this dosa for me, etc. They collected something called as service tax. They collected something called as what, sir? Service tax. Sir, how much, sir? 110 rupees. On our 1100 rupees they collected 10%, so 110 rupees. 110 rupees they collected service tax. What is the total price? 1210, sir. Now because I am in a 5-star restaurant, because it is a luxury restaurant, they also collected something called as luxury tax from me. They collected what, sir? Luxury tax 10%. Because it is a 5-star restaurant, they also collected something called as luxury tax 10%. How much luxury tax you paid, sir? 121 rupees. 121 rupees. So what is the total? 1331. Now, in that particular restaurant which I had been, no, there was a live music which was playing. Someone was playing piano, someone was playing tabla, and there was a beautiful person who was singing. There is a beautiful lady who was dancing, etc. So I'm getting entertained because of that reason. So they also collected something called as entertainment tax. They collected something called as what? Entertainment tax. How much, sir? Again, same 10% they collected entertainment tax. It is 133 rupees. So the total price will become 1464. Okay, let us stop our tax amounts over here only. Actually, basically these taxes were collected. If you go to if you had been to 5-star restaurant before GST came into existence, they would have collected from you VAT, they would have collected service tax, they would have collected luxury tax, entertainment tax, etc. Now, if you see what is happening, there is one single transaction of supply of dosa to you. 2 dosas they have supplied. For those 2 dosas, they have collected how many different types of tax? 1, 2, 3, 4. 4 different types of taxes has been collected on a same single transaction. For one single transaction, they have collected 4 different types of taxes. Now, wherein these taxes, now if you see these taxes, VAT, luxury tax and entertainment tax. These taxes, VAT, luxury tax and entertainment tax, these were going to whom? State government. This was going to the state government. And the service tax which was collected, this service tax which was collected was going to central government. VAT, luxury tax, entertainment tax was a tax which was collected by the state government, and service tax was collected by the central government. Now, service tax was collected by whom? Central government. Now, what is happening over here? If you see properly, actually, you are paying tax on tax. Point number 1. One of the biggest deficiencies was tax on tax, or it is also called as cascading effect was happening. Meaning, first you paid on 1000 rupees, you paid 100 rupees as tax. Correct? Then they collected some additional amount of tax from you, which is service tax, that is 1100. If you see this 1100 is on 1000 rupees plus 100 rupees, wherein the 1000 rupees is the dosa value and 100 rupees is VAT. 100 rupees is VAT. So the 10 rupees extra which you are paying, no, the 10 rupees extra which you are paying as service tax is a tax on tax. The 10 rupees extra which you are paying as service tax is a tax on tax. Similarly, here also luxury tax also you collected on VAT as well as service tax. Similarly, entertainment taxes you collected on VAT, service tax, luxury tax, etc. all together. So what was happening before GST law came into existence? There was tax on tax which was collected by you. There was cascading effect which was there. There was cascading effect. And one more beautiful thing which was happening was the same transaction was treated as goods as well as services. The same transaction was treated as what, sir? Goods as well as services. Now there are 2 dosas, sir. For the dosas, they were collecting VAT also and they were collecting service tax also. Now if you would have purchased a SIM card, because it is movable, they would have collected VAT from you, and because by purchasing that particular SIM card, you are going to take the services of that company, that telecommunication company, they were collecting from you also service tax. Meaning, what was happening? There was no discrimination, proper discrimination. Whom do I, what is treated as services, what is treated as goods? Sir, why, sir? Because VAT was collected by state government. Service tax was collected by central government. Both of them wanted revenue. So they started calling it as goods also, as services also. You go to a restaurant, you are having food, sir. You are having food. For that particular food, because it is movable, you are having it, you are feeling it, you are eating it, etc. They were collecting VAT. Now, because there is a person who is preparing that food for you, they were also collecting service tax. They were also collecting service tax. So what was happening? There was no proper discrimination. There was no proper mechanism for identifying whether a particular transaction is service tax, whether a particular transaction is services or it is goods. Then see, as I told you over here, these taxes, VAT, luxury tax and entertainment tax, it was collected by whom? State government. Now assuming it is state government of Karnataka. Now I am going to a 5-star restaurant in Karnataka. Obviously the state government, there will be say in a particular state we don't have 5 different state governments, correct? It is one single state government. Now one single state government is collecting 3 different types of taxes from me. One single state government is collecting 3 different types of taxes from me for one single supply. The supply is same. There is no change in the supply. Okay, it is VAT. I mean the supply is same. It is supply of dosa only. For that supply of dosa, they are collecting VAT also. They are collecting entertainment tax also. They are collecting luxury tax also. And who is collecting it? It is the same state government of Karnataka. Please note, it does not mean that only in Karnataka they were collecting these taxes. In other states also similar type of taxes were collected. Now Karnataka government, one single government, one single state, then why so many different types of taxes? They could have made one single type of taxes, no? Say assuming, say they have collecting what, 10, 30%, correct? So they could have had one single type of tax wherein they are taxing the entire transaction at 30%. They are taxing the entire transaction at 30%, but no, they wanted different types of tax, entertainment tax, luxury tax, VAT, etc. And a person, no, as a businessman, it was very difficult for me. I had to file, I have to take registration under VAT law also. I had to take registration under this luxury tax law also. For entertainment tax payment also I had to take registration, and I had to file these returns separately. I had to file these returns separately. I had to file all these returns also separately. So my complaints was huge. I had to do a lot of complaints, etc. So these are the some important deficiencies which were there in pre-GST law. These were the important deficiencies. Please note, this was something which was happening before GST law. Before GST law, this was happening. Okay, so now let us see what the material is talking about. What are the deficiencies in the existing indirect tax system? So there was a question asked once again. I mean, once they had asked a question on this particular topic. Now a question on this topic can be of in 2 different ways. What are the deficiencies in existing indirect tax system? Existing indirect tax system, that means before GST law, tax system before GST, or GST is ill for existing indirect tax system, or GST is cure for the ills of existing indirect tax system. If you see your institute material, there is a point which they have given: GST is a cure for ills of the existing indirect tax system. What are the reasons? Because these are the ills of existing indirect tax systems, and because of these ills or because of these deficiencies, GST came into existence. What are the ills or what are the deficiencies in existing indirect tax system? Deficiency number 1, theoretical question. Again, please note, this is a theoretical question. Double taxation of transaction as both goods and services. So a particular transaction was treated as goods also and was treated as services also. We just now saw, I took an example wherein same 2 dosas, supply of 2 dosas is treated as goods also and services also, and therefore VAT was levied and service tax was also levied. Double taxation was happening. Same transaction was taxed twice. SENVAT and state level VAT set off of one against another was not possible. Now we took an example of dosa. Say if there was a manufacturer and then he's selling the goods to an wholesaler, the manufacturer had to pay a tax called as excise duty because he's manufacturing, and once that manufactured product is sold, he has to pay something called as VAT. Excise duty was collected by central government, VAT was collected by state government. VAT was collected by state government. They both were actually value added tax, meaning only on the value addition which you are making, these taxes were collected. These taxes were collected. But one tax was collected by central government and another tax was collected by state government. The set off of one against another was not possible. Set off means what, sir? Say for example, I have paid tax of rupees 100 on my purchase. On my purchase, I have paid a tax of rupees 100. On my sale, I have to pay a tax of rupees 120. So what government says, Mr. Dilip, you have to pay 120 rupees. Mr. Dilip, you have already paid 100 rupees to me on purchases. Therefore, pay me only 20 rupees. Therefore, pay me only 20 rupees. Okay, this is set off. This is set off, meaning whatever taxes you have on your purchases, you are using it for making the tax payment on your sales. For making the tax payment on your sales. This is what, sir? This is called as set off. Okay, this is set off of taxes. This is set off of taxes. Now, excise duty and VAT, which was collected on supply of goods, they were both basically value added tax only, but still set off of one against another was not possible. Set off of one against another was not possible. Similarly, state government had different types of taxes such as luxury tax, entertainment tax, VAT, etc., which was not subsumed into VAT. See, they were not merged with one single tax. There was one single state government only is collecting some 10 different types of taxes, which was again bad. Then VAT on goods was not integrated with tax on services. So, but they were collecting VAT also on goods, and they were collecting service tax on services. They also did not have any integration. There was no linkage. So for services, they were collecting only service tax. For goods, they were collecting only goods, and some transactions were treated as both goods and services, and they were collecting both of them. So these were the deficiencies in the existing tax system. Deficiencies in what, sir? Deficiencies in existing indirect tax systems. Now, this was what was happening before GST law. Now, let us understand the concept of GST. Let us understand what, sir? The concept of GST. Now, it is, I mean, from here, the actual discussion on GST is starting. Let us understand what do you mean by GST, what is the actual concept of GST, how GST is collected, etc. Basic things we'll be learning, okay? So first chapter is just introduction, only basics you will be learning. Now for understanding the concept of GST, let us take an example of supply chain. We will take an example of a supply chain which consists of different people, say manufacturer, wholesaler, retailer, and final consumer. In our school days in biology, we would have seen something with respect to what is that, food chain. Say eagle is eating snake, snake is eating frog, frog is eating I mean that food chain was there, correct? So just like that, here we are talking about supply chain. There is an manufacturer, wholesaler, retailer, and final consumer. Manufacturer is selling the goods to wholesaler, wholesaler is selling it to retailer, and retailer is finally sending it to the final consumer. Now let us take an example wherein the manufacturer is manufacturing a TV. The cost of manufacture of this TV for him is rupees 100. Okay, let us take an hypothetical example. The cost of manufacture of this TV for him is how much? Rupees 100. Because he has manufactured this TV which is manufactured by him, he is going to sell this TV. Because he is going to sell this TV, he has to pay a tax called as GST. Now let us take the tax rate to be 10%. Okay, let us ignore whether it is interstate, intrastate supply. Let us ignore what is the nature of supply, etc. Let us call it as GST only, and for easy calculation we will take the tax rate to be what's at 10%. Now he is manufacturing a TV. This TV is sold by him to the wholesaler. At the time of sale, he has to collect a tax called as GST. He has to collect a tax called as GST. How much, sir? 10% is the GST amount, 10 rupees. So his actual total selling price will become how much? His total selling price will become 110 rupees. And this wholesaler is going to divide this amount into two arrow marks. One is his cost and one is GST. Cost is how much? 100, and GST is how much? 10. Cost is 100 and GST is 10 rupees. Cost is 100 and GST is how much, sir? 10 rupees. Now please understand this carefully. Under GST law, sales are also called as, under what, sir? Under GST law, sales are also called as outward supply. Under GST law, sales are also called as what? Outward supply. And the tax which you have to pay on your sales is called as output tax. So if you come across this word outward supply, that means it is sales. And if you come across this word output tax, that means they are asking you to calculate the tax on your sales. Similarly, under GST law, purchases is called as inward supply. Sales are called as outward supply, purchases are called as inward supply, and the tax which you pay on your purchase is called as input tax. So if someone is selling the goods to me, for me it is a purchase, it is an inward supply, and the tax which I pay to him, for me the tax will become what, sir? Input tax. It will become input tax. Therefore here, can I call it as output GST? Manufacturer is selling the goods to a wholesaler, so can I say that the GST which is charged by him, it is an output GST for the manufacturer? Yes sir, 100% yes. And can I say the GST which the wholesaler is paying to the manufacturer will be called as input GST to him? Answer is 100% yes. Now to his cost, he is this wholesaler is going to add some value. He will definitely not sell it for 100 rupees. He is going to make at least some profit out of it. Say he makes a value addition, or he makes a profit of rupees 20 on this supply. So his cost of goods sold will become 120 rupees. Now because he is selling the product to the retailer, wholesaler purchased the product from the manufacturer. Now he is going to make some profit by selling this particular product. He makes a profit of rupees 20. So his cost of goods sold will become 120 rupees, and he is going to sell this particular product. So at the time of sale, he has to pay GST. How much? 10% GST. How much GST has to pay? 12 rupees GST. So what is the total selling price? The total selling price will become 132 rupees. The total selling price will become how much? 132 rupees. So similarly, for the retailer, he will divide this amount into 2 arrow marks. For him the cost will be 120 rupees, and for him the input GST will be how much? 12 rupees. Sir, why sir this division is required? See, in your accounting, the cost, that is the 120 rupees in this case, will go to your profit and loss account, and the 12 rupees which is there, it will go to your balance sheet. It is your tax which is paid by you to the government. So for him the cost will be 120 rupees, assuming he also makes some profit. Who? The retailer is also going to sell the goods to someone, say final consumer, and he also makes a profit of rupees 20. So his cost of goods sold will become 140 rupees. So for him the cost of goods sold will become 120 rupees, 140 rupees, on which he is also going to charge GST. How much? 10%. How much GST? 14 rupees GST. Therefore the final selling price will become how much? 154 rupees. So this 154 rupees who has to pay? The final consumer will pay. Obviously the final consumer is going to use the product for his own purpose. He is not going to sell this product to anyone else. He is not going to sell this product to anyone else. So this is an example of a supply chain under GST law. This is an example of a supply chain under GST law, wherein the goods are sold by manufacturer to the wholesaler, wholesaler is selling it to the retailer, and retailer is finally selling it to the final consumer. He is finally selling it to whom, sir? He is finally selling it to the final consumer. Now wholesaler is required to pay some tax amount to the government. The tax which is collected by the wholesaler from his and on his sales is called as output GST. So he is liable to pay. He is liable to pay how much? 10 rupees from he is liable to pay 10 rupees to the government. He is liable to pay how much? 10 rupees to the government. Is he paying this 10 rupees from his own pocket? No, sir. Then from where is he paying it? He is collecting it from the wholesaler and then remitting it to the government. Now, in case of manufacturer, we don't have the details of his purchases. So the tax which he is liable to pay is 10 rupees. Let us take that the tax which he is liable to pay is 10 rupees. Now you will understand what I am trying to tell you. See, the wholesaler is liable to pay. The wholesaler is liable to pay how much? On his sales he is liable to pay 12 rupees, correct? Now the government says, wholesaler, wait, don't pay me 12 rupees. Government says what? Hey wholesaler, wait, you don't pay me 12 rupees. Wholesaler says why? Government says, hey wholesaler, do you remember that when you purchase this product from the manufacturer, you have paid the manufacturer 10 rupees, correct? Yes, I remember that I paid the amount of 10 rupees on my purchases to the manufacturer. Manufacturer has paid that amount to me. Government is telling, manufacturer has paid that amount to me, therefore please take the benefit of that amount which is already paid by you. Therefore please take what, sir? Benefit of that amount which is paid by you. So if I am taking the benefit of the amount which is paid by me on my purchases, then that particular concept is called as input tax credit. At the time when I am liable to pay tax on my sales, I am taking the benefit of the taxes which is paid by me on my purchases. This particular concept is called as input tax credit. What do you mean by input tax credit? Whenever you take the benefit of the taxes which is paid by you on your purchases at the time of making the payment of your output tax liability, it is called as input tax credit. Therefore net tax which he has to pay in cash is how much? 2 rupees. Net tax which he has to pay in cash is how much? 2 rupees. See, his liability is 12, but government is telling this is already paid by the manufacturer, you only pay me rupees 2. You only pay me rupees 2. Similarly, retailer is liable to pay how much? 14. Now government says, hey retailer, I know that you are liable to pay 4 rupees to me, but do you remember that at that time when you purchase this product from the wholesaler, you have already paid some amount to me. You please reduce that amount and pay me only the difference. The difference amount is required to be paid in cash. Is required to be paid in cash. Now, if you see what is happening under GST law, point number 1. What is happening under GST law? Point number 1. We'll change the pen color. Point number 1. At each and every stage of supply chain, there is some amount of tax which is going to the government. In first stage it is 10, second stage 2 rupees, third stage 2 rupees. There is some amount of tax which is going to the government. If you basically see, it is a tax on the value addition which is done in the each stages. It is a tax on the value addition which is done in the each stage. So first stage, because there is a complete TV which is manufactured, the value addition is 10 rupees. So 10% of 10 rupees is how much? Sorry, 10% of 100 rupees is how much? 10 rupees. This 10 rupees is paid to the government. In the second stage, wholesaler is making a profit of rupees 20. He is making a value addition of rupees 20, and 10% of rupees 20 is how much? 2. Sir, why is it 10%? Because the GST rate is 10%. 10% of rupees 20 is how much, sir? 2 rupees. If you see, the amount which is paid by him in cash is only 2 rupees. The amount which is paid by him to the government in cash is only 2 rupees. Similarly, the retailer also makes a value addition 10%. The retailer also makes a value addition. 10% of this value addition, that is 20 rupees, is 2. That is the amount of tax which is paid by him to the government in cash. So can I say, point number 1, can I say GST is a tax on value addition? Can I say that GST is a tax on value addition? Yes, sir, you can 100% say that GST is a tax on value addition. That means what? If there is no value addition, there is no tax which you have to pay. Say for example, retailer, for him the cost is say rupees 120, and this TV which is purchased by the retailer, he is not getting any customer at all. Therefore, if you are not getting any customer, obviously you will not be making any profit at all by selling this product. So he is treating that, let me sell this particular product at cost only. And therefore, without making any profit, he sells this product at his cost of rupees 120. At the time of sale, he has to pay GST of 10%. How much? 12 rupees. Therefore, his selling price will become 132 rupees. Please understand this carefully now. Now, at the time on his sales, he has collected tax of rupees 12, and on his purchase he has paid a tax of rupees 12. Net amount of tax which he has to pay to the government in cash is rupees 0. Why, sir? Because net amount of tax which he has to pay to the government is 0. Why, sir? Because there is no value addition. GST is a tax on value addition. If there is no value addition, there is no tax which you have to pay. There is no tax which you have to pay. Point number 1. Point number 2. If you see in GST what is happening, whatever tax is paid by you on your purchases, whatever tax is paid by you on your purchases, you are taking the benefit of that at the time of making the payment on your sales. Whatever payment of tax is made by you on your purchases, you are taking the benefit of the taxes. You are taking the benefit of the taxes which is paid by you on your purchases at the time when you are liable to pay the tax on your sales. So what is happening under GST law? There is input tax credit available at the each stage of supply chain. So there is continuous chain of input tax credit. ITC is available under each and every stage of supply chain. Under each and every stage of supply chain. And one more beautiful thing, if you see under GST law, what is happening is government has got how much amount of tax. In first stage 10 rupees, then it got 2 rupees, then it got 2 rupees. So total amount of tax which government got is how much? 14 rupees. The total amount of tax which government got is 14 rupees. 14 rupees is the total amount of tax which the government has got. Now if you see in GST law, what is happening? Tax burden is shifted. Manufacturer is collecting it from wholesaler, wholesaler is collecting it from the retailer, and retailer is collecting it from the final consumer. The entire tax burden under GST law is on the final consumer. Nobody in the supply chain is paying the taxes from their own pocket. Each and every person is collecting the taxes from the next person in the supply chain. So under GST law, what is happening? There is a shifting of burden happening. Shifting of burden is happening, and who is bearing the entire burden? Who is the person who is paying the total amount of taxes? In the present case, if you see, the final consumer has paid a tax of rupees 14. Retailer has collected 14 rupees from the final consumer. So final consumer has paid a tax of rupees 14. So the entire burden is shifted to whom, sir? Final consumer. Government wanted 14 rupees, and who has paid this 14 rupees? It is the final consumer. So entire burden is shifted under GST law. The tax burden is shifted, and the entire burden is on whom? The entire burden is on the final consumer. The entire burden of making the payment of taxes is on final consumer. So this is some of the concept. I mean, this is how GST law is designed. The concept of GST law, if you see, GST is a value added tax. What is GST? It is a value added tax, meaning you have to pay tax only on the value addition which is made by you. You purchase something, you make value addition, only on that value addition you are paying the taxes. Value addition need not be only profit amount which you are making. Say for example, I purchased a sari. Now I am packing that sari in a beautiful box and then selling it. So that is whatever packing cost is incurred, that is my value addition, correct? So it is a tax on value addition. Now under GST law, one more beautiful thing which you can see is that there is no tax on tax. Because there is only one type of tax, which is called as GST. In case of interstate supply, it is IGST. In case of intrastate supply, it is CGST, SGST or CGST, UTGST. There is no tax on tax at all. There is no concept of tax on tax. It was happening in pre-GST law. They were collecting CGST, SGST, IGST, UTGST, they were collecting VAT, service tax, luxury tax, etc. But under GST law, that is not happening. GST law, the tax on tax is not happening. So it eliminates cascading effect. We'll come to this point later. Next point says GST offers comprehensive and continuous chain of tax credit, meaning at each and every chain, at each and every stage of the supply chain, you are taking the benefit of taxes which is paid on your purchases. So you are taking the tax credit paid by you on your purchases. Under GST law, the burden is on whom? The burden is on the final consumer. The burden is on final consumer, and because we have brought GST into existence in India, there is now uniform tax structure throughout India. Whether you are in Karnataka or you are in Telangana or you are in Tamil Nadu or you are in Uttar Pradesh or you are in Delhi, it does not matter. The tax law is same. The tax law everywhere is same. Similarly, India has adopted dual GST model. There are various different types of models of GST, but India has adopted dual GST model. Sir, what do you mean by dual GST model, sir? In simple word, dual GST model is a type of model wherein for a single transaction of supply, both central government and state government will collect the taxes. Meaning, whenever a supply is made, the amount of tax will go to central government as well as state government. So because we have a federal structure over here, we have division of powers, we have state which has their own governments, and at the central level there is central government also. Because there is division of powers, the tax amount is also divided. So what type of model of GST we are following? Dual GST model. For a same transaction, the tax will go to central government as well as state government. For example, if I am supplying the goods within the state of Karnataka, CGST will go to central government, SGST will go to state government. If I am supplying from Karnataka to Tamil Nadu, then IGST is collected. Correct? This IGST will be divided between central government and state government. This IGST will be divided equally. Say 100 rupees is the IGST, 50 rupees will go to central government and 50 rupees will go to state government. Why, sir? Because the type of model, the model of GST law which we are following is called as dual GST model. We are following what's a dual GST model under dual GST model in India. Now, there is one point which was left over, which we'll see now. India has adopted destination based consumption tax principle. India has adopted what principle, sir? Destination based consumption tax principle for GST law. Sir, what do you mean by this? For explaining this concept to you, let me give a simple example. Now, say for example, there is an intrastate supply. Say for example, from Bangalore to Mysore, goods are supplied by Priya Sarees. So Bangalore is in Karnataka, Mysore is also in Karnataka. So goods are supplied, say Priya Sarees is supplying goods to Anushka Sarees. So goods supplied are worth rupees 1 lakh. Goods supplied are worth rupees 1 lakh. Now because it is an intrastate supply, the tax which is required to be paid by me is CGST and SGST. Assuming the rate is 10%, so CGST will be 5%, SGST will be 5%. So how much CGST is required to be paid? 5,000 rupees. And how much SGST is required to be paid? 5,000 rupees. So total value will be 1,10,000 rupees. Now what will happen over here? What will happen to this tax amount? This tax amount, what is going to happen over here? This tax amount which is there, no? 5,000 will be taken by central government and the other 5,000 will be taken by state government. Which state government, sir? It will be taken by the state government of Karnataka. This will be taken by state government of Karnataka. This is what dual GST model actually says. This is what dual GST model actually says, meaning a transaction, for a single transaction, the tax revenue will go to both central government and state government. Now, this is a simple case of intrastate supply. Now, what if it is an interstate supply? Intrastate supply is simple. What if it is an interstate supply? Say Priya Sarees located in Bangalore is supplying goods to Rajani Sarees in Chennai. So Priya Sarees in Karnataka is supplying goods to Rajni Sarees in Tamil Nadu. Assuming the value of the goods which is supplied by me is 1 lakh rupees, and on this transaction I have to pay something called as IGST. 10% is the GST rate. How much? 10,000 rupees. So total selling price will become 1,10,000 rupees. Total selling price will become how much? 1,10,000 rupees. Now we all know that this 10,000 rupees which is there, IGST which is there, no? This amount will be collected by the central government and it will be divided between the central government as well as state government. Central government is going to divide this between central government and state government. Let us divide it equally, 5,000 to central government and 5,000 to state government. Now we know that it will be 5,000 will go to central government. We have only one central government. Now the question is, the other 5,000 which is going to the state government, the other 5,000 rupees which is going to the state government will go to which state government? Will this amount go to the state government of Karnataka, or will it go to the state government of Tamil Nadu? We are not talking about the central government share. We know that it will go to the one single central government, which is the Parliament of India. But the question is with regard to the tax revenue which will be going to the state government, whether it is going to go to the state government of Karnataka, or it is going to go to the state government of Tamil Nadu, or it is going to the state government of Tamil Nadu. Lot of different fights happened, and they finally came to a conclusion that we will follow the destination based consumption principle. Finally, they came to a conclusion. Lot of fights happened. Karnataka government told, I will take the revenue because I am selling the goods to Tamil Nadu. Tamil Nadu government told, no. I am the consumer. I am the person who is demanding the goods. So I will take the revenue. The money is going from my state. I will take the revenue, etc. A lot of discussion happened. And finally, they decided that we will follow destination-based consumption principle. What is this destination-based consumption principle, sir? This destination-based consumption principle says the revenue of SGST, I mean in case of IGST, the state government which is going to take the revenue will be that particular state government where the goods are finally destined and consumed. It will be that state government which is finally consuming that particular goods, or where the goods are finally destined and consumed. The destination of these goods is in Tamil Nadu and the consumption is happening in Tamil Nadu. Therefore, the revenue will go to the state government of Tamil Nadu. No more fights. The revenue will go to the state government of Tamil Nadu. So this is what this concept is talking all about. We follow what principle? Destination based consumption principle. We follow what principle, sir? Destination based consumption principle in India. Okay, so I think almost all the discussion is done. So we have some other theory points. The major discussion of first chapter is done. Now other theory points. Now before GST law, we had many different types of taxes: service tax, excise duty, VAT, luxury tax, then entertainment tax, CVD, special CVD, then surcharge, Swachh Bharat cess, Krishi Kalyan cess, etc. Tax on lottery betting and gambling, tax on alcoholic liquor for human consumption, etc., alcohols, etc. We had so many different types of taxes. Now, these taxes are now all merged with GST. There were some taxes which was collected by central government, and there were some taxes which was collected by state government. Now, which are those central government taxes which is merged with GST? Which are those state government taxes which is merged with GST? Meaning, to make this GST into existence, the central government had to forgo some of its taxes. Meaning, now the central government is no more going to collect those types of taxes which they are including in GST. Similarly, the state government has also included lots of its taxes under GST law. Which were those taxes which was collected by central government, which is now subsumed with, which is what, sir? Which is now subsumed with GST. What are those taxes? Tax type number 1 is central excise duty and additional excise duty. Central excise duty, I mean whenever you manufacture, you had to pay excise duty. So that central excise duty and additional excise duty is now merged with GST law. Similarly, service tax is merged with GST law. Before on services they were collecting something called as service tax. Now that is also merged with GST. Excise duty on medical and toilet preparation, by this Medical and Toilet Preparation Act, they were collecting something called as excise duty. That is also merged with GST law. CVD and special CVD, it is a form of excise duty and VAT which was collected in case of import of goods, which is now merged with GST law. Central sales tax, before, whenever the supply was made from one state to another state, there was something called as central sales tax which was collected. Now that is also merged with GST law. Then central surcharge and cess which were related to supply of goods and services. Like for example, they were collecting Krishi Kalyan cess, Swachh Bharat cess, etc., which was collected by the central government. Those cess are also now merged with GST law. Now state government was collecting some taxes. Those state taxes which was collected by state government, which are now merged with GST law, are VAT or sales tax. At the time of selling a product, they were collecting something called as VAT or sales tax, which is now merged with GST law. Luxury tax was collected, now merged with GST law. Entertainment tax, which was collected, is merged with GST law. Tax on lottery, betting and gambling is merged with GST law. Sir, what do you mean by this? It is merged with GST law, it is subsumed with GST law. Meaning, now say if there is a sale which is happening, they will collect GST. Say for if you go to a luxury restaurant, also instead of luxury tax, they will collect GST. If you go to an theater and watch a movie over there, they will not collect and watch a movie over there, they will not collect entertainment tax, they will collect GST. If you go purchase a lottery ticket, or if you do gambling activities, they will not collect that lottery tax, etc. They will collect something called as GST. Then we had something called as purchase tax or entry tax, which is merged with GST. Then on advertisement, they had a separate types of tax, which is now merged with GST. And all the surcharge or cess which was collected by the state government for supply of goods and services. Meaning, in simple words, whatever taxes was collected by central government and state government for supply of goods and services is now merged with GST law, except some taxes. Which are those taxes which is not subsumed or merged with GST law? Basic custom duty. The basic custom duty which is collected for import of goods or export of goods as per the custom law, that is not merged with GST. That basic custom duty is still being collected. Then property tax and stamp duty. For property tax, I mean you have a property, you have to pay property tax. Registration, at the time of registration you have to pay stamp duty, etc. That is still there. Then on electricity, they are collecting electricity duty, which is still there. Then excise duty on alcoholic liquor for human consumption. So whatever alcoholic liquor is consumed by human beings, on that they were collecting excise duty, that is still been levied. And then entertainment taxes, which is collected by local bodies. See, you go and watch a movie in theater, they will collect entertainment tax, and entertainment are also collected by local bodies. For example, my village is a very small location. What happens in my village is, say during some festival season, say for example during Dashara or the Diwali period, there are a group of people who will come and they will perform those say that some say Ramayana activities, etc. They are going to perform some skit. So they are coming to our village and they are performing some skit over there, wherein if we want to go watch that particular performance, we have to pay some money, 10 rupees, 20 rupees, etc. We have to pay some money to them. Now they are coming to our village and earning some money over there. So what local bodies over there, panchayat, etc. they were doing is, they are collecting taxes from them. Meaning, see, they are using the place in our village and they are performing those activities. So they were collecting what? Taxes from them. They were collecting taxes. Entertainment taxes, that tax which was collected by local body is still applicable. It is still applicable. Now, so we have discussed what do you mean by tax, types of taxes, constitutional provisions, deficiencies, concept of GST, inter and intrastate supply, and the taxes which is subsumed with GST law and taxes which is not subsumed with GST law. Now two more discussion is pending. One is benefits and GST common portal. Again, it is theoretical. First chapter is completely theory. Now, what are the benefits of GST law? Because of introduction of GST law, is there any benefit which we have got? Answer is 100% yes. What are those different benefits? Point number one, benefit number one, creation of unified national market. Now, a person doing business in Karnataka or Tamil Nadu or any other places does not have to worry, because the law is same everywhere. Before, the VAT law in Karnataka was not same as the VAT law in Tamil Nadu. Before, a product was taxable. Say for example, say a particular bag, a leather bag was taxable at 12% in Karnataka. Same leather bag was taxable at 14% in Tamil Nadu. Same leather bag was taxable at 8% in Maharashtra, because they had their own laws. And a person, say as a chartered accountant or company secretary or cost accountant, if you had to practice under GST or under indirect taxes before GST law, state wise you had to learn the separate laws. Every state you have to go, you learn the separate law over there. But now that concept is not there. There is an unified national market. There is one nation, one tax. This was the way they had advertised GST. One nation, one tax, etc. Then because of GST law, Make in India initiative will increase. Why, sir? See, a person does not have to worry about what type of tax he has to pay, whether he has to take registration in 10 different types of taxes, excise duty because I'm manufacturing, excise duty, because I'm selling VAT, because there is a luxury products, luxury tax. No such worry. It is only GST. Whatever you do, you have to pay only GST. Because of this, because there is only one single type of tax which they are collecting, the people who are going to make the product will increase. Make in India initiative will increase. Then enhanced investment and employment. Now GST which we are following is also followed in almost 165 countries around the world. So almost everyone in the world is following what type of taxes? GST. The indirect tax system which is followed by them is GST. Now because we are following GST, because we are following that type of taxes which is followed by other countries also, so people from other countries will now not worry about investing in India. See, what used to happen before is, a person if he had to come and invest in India, no, he had a lot of confusion. What type of tax law it is? Where should I take registration? If I'm taking registration sometimes it was happening that he's taking registration in excise duty, VAT, and he forgot to take registration under service tax. A notice was coming from service tax law, so service tax department. So now that worry is not there. Now that worry is not there. Now, I mean, that person, he knows that there is only one type of tax which is GST, and he is very familiar to that law, because the law which is for in his country is similar to our law. So he, by reading some, say, he will at least have basic understanding about the law. Therefore, because of this reason, he will now be ready to invest in India. And if he is increasing the investment in India, the employment opportunity will also increase. Ease of doing business. Ease of doing business, as I just now told you, I don't have to take 10 different types of registration. I don't have to file 10 different types of returns. I just have to take one registration and follow that. So the business doing will become very easy. There is certainty in tax administration. Now, under GST law, the beauty is that everything is online. Everything is online, meaning taking registration is online, filing the returns is online, settling the payments is also online. You don't have to go to the department at all. No bribing concepts, etc. So now the tax administration, there is a lot of transparency which is there. Now there is certainty. You know what is happening and how it is happening, etc. You don't have to go to department. Most of the cases, people may not even know who is the officer. Who is the officer? Whether the officer is located in the area where he is located, or he is located in some other place, he has no idea at all, because everything is online. Everything is automated under GST law. So the same thing is what next point is telling. Automated procedure with greater use of IT. So all the procedures under GST law is automatic. I mean, it is online. We have a portal called as gst.gov.in. So it is this portal where if I want to take registration under GST law, I go to this portal, I apply for registration. If I have to file my returns, I go to this portal, I file my returns. If I have to make the payment of taxes, I go to this portal, I pay the taxes, etc. So it is automated. All the procedures are now automated. Then reduction in compliance cost. One of the biggest advantage which the businessmen have got is reduction in compliance cost, because before, if a businessman had to take 5 registrations, he had to file 5 returns in a month. Okay, and for all these 5 returns he had to pay separately. Say 1000 rupees per return, he had to pay how much? 5000 rupees as compliance cost. Now he has only one type of registration, that is under GST law. Assuming he pays 2000 rupees also for this, he is reducing compliance cost by 3000 rupees. So because there is single type of tax law which is there, because of that the compliance cost is also reduced. And obviously GST is mitigating the ills of cascading effect. There is no cascading effect under GST law which is happening. Some cases it may happen, which we'll see in future, but under GST law cascading effect is not happening. Tax on tax system is not there. And it is also beneficial to small traders and entrepreneurs. It is very easy to understand. And if your turnover is before VAT law limits were different, 5 lakh rupees. If your turnover is more than 5 lakh rupees, you have to take registration. And if your turnover is, some states had the turnover of 1 lakh rupees, some state told that if your turnover is more than 10 lakh, you have to take registration, etc. But under GST law, the turnover limit is 20 lakh. If your turnover is crossing 20 lakh, then only you have to take registration, which is actually beneficial to small traders and entrepreneurs. They can decide and accordingly plan to take their registration. So these are some of the benefits of GST. These are some of the benefits of GST. Now, one more important point for our discussion is GST common portal. As I just now told you, everything under GST law is happening online. Everything under GST law is happening online. How is it happening, sir? There is a common portal which is called as gst.gov.in. This is also called as what, sir? This is the website for GST. This is also called as common portal. This is also called as common portal. So this portal is common for states as well as central. It is not that state government has their own GST website and central government has their separate GST website. No, there is only one single website. Whether you are a person doing business in Karnataka or in Andhra Pradesh or in West Bengal, it does not matter. There is the same portal, common portal, wherein you have to go and do various different activities, whatever is required to be done by you. Now this can be accessed by us through internet. If I want to access this, I will have to take an internet connection, meaning if the taxpayers have to access it, they need internet connection. And the department officials, if the officials etc., they want to access it, it requires intranet connection. It is a common portal which is managed by a company called as GSTN, Goods and Services Tax Network. There is a company, Section 8 company, not for profit organization, which is GSTN, which is managing this particular website called as gst.gov.in, common portal. Sir, what are the different activities which can be undertaken by me on this GST common portal? What are the functions? This is the question which they normally ask in the examination. Functions of GSTN. What are the functions of GST common portal, or functions of common portal, or what are the functions of gst.gov.in? Filing of registration application. I want to take registration under GST law. I go to this portal, I take registration. We'll see all these things, okay? We'll see how it happens, how this portal looks like, how registration is done, and how the returns are filed, etc. Then point number 1, if I want to take registration, I need to go here. If I want to file my returns, I need to go here. Then if I want to create any payment and payment challan, and if I want to make any payment of taxes, I need to go here. Whatever IGST you are paying, the settlement, etc., you don't have to do the settlement. Everything will happen over here only. So this is about GST common portal. Now other points in your first chapter, which is their introduction chapter, is there, which was the first country which introduced GST? It was France. France was the first country to introduce GST in entire world. No, France was the first country to introduce GST. Now there are some places which are regarded as special category states. There are some special place in India which are regarded as special category states for GST purpose. For GST purpose, I am going to call some places. How many states? There are 11 states. There are 11 places which I am going to call as what, sir? Special category states. Which are those 11 states? Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, Manipur, Jammu and Kashmir. There are how many states, sir? 11 special category states. There are how many states? 11 special category states. Which are these 11 special category states? Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, Mizoram, Jammu and Kashmir. Mizoram and Jammu and Kashmir. So these are called as what, sir? These are called as 11 special category states. These are called as special category states. How many special category states are there? 11 special category states are there. You will understand the importance of these special category states in our future chapters. Basic for now you understand that there are 11 states which are called as special category states. Which are these special category states? Yes, Nagaland, ma'am. Say a small memory technique to remember this is, yes, Nagaland, ma'am, through Michael Jackson. Yes, Nagaland, ma'am, through Michael Jackson. Please note, personally I like Michael Jackson. It is just a memory technique, easy to remember. Yes, Nagaland, ma'am, through Michael Jackson. Yes for Sikkim, N for Nagaland, M for Manipur, A for Assam, A for Arunachal Pradesh, M for Meghalaya, T for Tripura, H for Himachal Pradesh, U for Uttarakhand, M for Mizoram, J for Jammu and Kashmir. So these are the special category states. What is the importance of these special category states? You will understand it in future in the respective chapters which we are going to discuss. Now there are tobacco and tobacco products, cigarette, pan masala, etc. on that GST as well as pre-GST taxes is collected. As I told you, these are called as sin goods. Government is promoting social welfare by increasing the tax amount on these products. How are they increasing it? They are increasing it by collecting GST as well as pre-GST taxes. So these are on tobacco and tobacco products, they are collecting GST as well as pre-GST taxes, which is excise duty. Similarly, there is something called as alcoholic liquor for human consumption. Please note, we are going to see this again in our future classes, but still because some points are mentioned on these topics in the first chapter I am discussing them. There is something called as alcoholic liquor for human consumption. Alcoholic liquor which is consumed by human beings, on that GST can never be levied. Alcoholic liquor for human consumption, GST can never be levied. GST can never be levied. And there is something called as HP man, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas. There is something called as HP man, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas. On these 5 products, GST will be levied, but from a future date. As on today, no GST is levied on these 5 products. GST will be levied on a future date. What is that future date? Nirmala Sitharaman or any other finance minister may notify it in future. Okay, so this completes our discussion on introduction chapter. I hope you are understanding the classes, and let us meet in our next video or next class, wherein we'll be starting the first and most important discussion on GST, which is supply. Most important chapter in your entire GST law is this particular chapter, which is supply, section 7. Okay, let us meet in our next class. Till then, tada, bye bye, take care.